ಕ್ಲಾಸಿಗೋಸ್ಕರ.
Classigoskara, okay.
Yes,
And
sir.
last time when I took class at 8 o'clock also people were sleeping. Huh? Within full Joshal Vandira?
Revision class, no sir.
Revision class, sir.
Okay. Nice, good. I like it. All right. So let us start. Okay, now. Basics, right? So already cover agirutte, but still let's start with accounting process itself, correct? So now accounting process. What did I mean by accounting process? I told you any process will have an input and a output. Yes, will have certain input and certain output. So in our case, that is in accounting process, what is the input? It could be your day-to-day transactions based on your invoices, contracts, agreements, etc. Yes, based on this input, right, you record your day-to-day transactions in a book called what? Journal. Yes, we recorded it in journal. This is then taken to your ledger account, wherein in your ledgers you get the totals and the balances, right? In the journal you cannot get the totals or balances, but in the ledger you get totals or balances, which then is summarized in your trial balance, and from trial balance we prepare your financial statements. Yes, so this is nothing but my accounting process. Yes, all right. Next we also learned what are the different types of accounts. Yes, personal, real, and nominal. Right? Personally, again, there are three kinds, that is natural, artificial, and representative personal accounts. Yes. What do I mean by representative personal accounts? The accounts which represent a person. Yes. Examples could be what?
Outstanding
Payables, or your prepaid expenses, incomes, etc. Yes, all your prepaid incomes, expenses, etc. are all representative personal account. Shashank, wapas baro. Yes. Next, we also learned what are the golden rules of account. Simple. Yes, for personal account, what is the golden rule? Debit the
giver of benefit and credit the giver
benefit and credit the giver of benefit. For real account, what is the golden rule?
debit what comes in, credit all incomes
goes
and
out.
What comes in and credit what goes out. For nominal account, debit
All expenses and
all incomes and gains.
all incomes and gains. Excellent. Debit all expenses and losses, credit all incomes and gains. Now, our modern way of accounting, what did we say? All incomes, profits, and gains you will credit or debit?
Credit it, sir.
Credit, sir.
Expenses and losses you will debit. Assets will be
Debited.
liabilities will be
Credited.
your liabilities consist of what? Personal, real, or nominal account?
Only personal account.
Personal.
Because will be in your liabilities. Your P&L will have what?
Nominal account.
Nominal account.
It is coming to P&L. It has to be a nominal account. Your assets can assets that can either have have either personal or real account. Okay, now yes. From this, what did I say? So from your ledger accounts, we prepare trial balance. Now, what is a trial balance? Summary of all the ledger accounts. Yes,
Sir.
Yes,
It
sir.
is the basis for me to prepare my financial statements. Trial balance is the basis for me to prepare financial statements, and trial balance ensures only
Arithmetical
arithmetic accuracy. Excellent. Trial balance ensures only arithmetic accuracy. Yes. So if trial balance is tallied, can I say that the books of account does not have any errors?
No, sir, we
Sir.
cannot
Cannot say it does not have any errors. Correct. And when do I prepare a suspense account?
If
When
there
the
case
trial
any
balance
trial
is
is
not
not
tallied.
matching,
Not
not valid.
matching. The reason for preparing a suspense account is to temporarily match my trial balance and tally my trial balance so that I can prepare the financial statements, and preparation of financial statements is not delayed. That is the only reason of preparation of suspense account. Yes.
Yes, sir.
Correct? This is temporarily match using suspense account in order to avoid delay in the preparation of financial statements. Correct. So main purpose is what? To avoid delay. It is not to just tally the trial balance. It's a temporary thing. Yes, it has to be corrected. It has to be rectified before final financial statements are prepared. Everybody agrees with this?
Yes, sir.
Next, we also learned different methods of preparing trial balance. Yes, one is my balance method, which is normally used. Correct. wherein you get the debit balances and the credit balances from your ledger accounts. That's the closing balances are taken, and this is taken with my trial balance. From this we prepare financial statements. Yes. All right. Then we have a total method. In this, what do? We take the total of the debit column, total of the credit column, yes, and we take both debit and credit column totals of a ledger and take it to our trial balance. However, what should we note here? When you're taking the total of the debit or credit column, as the case may be, you will not be considering the balances carried down. Yes, remember this point. If you take the balance carried down amount, then obviously your trial balance will not tally. So you should not take the balance carried down. However, balance brought down will be included. Remember this point. Balance is brought down. Your opening balances you take, but closing balances you will not be taking. You will only take the total of the debit and credit column, excluding the closing balances. Yes. So based on this, when you prepare a total method, you prepare a trial balance based on total method. After this, there is another method, that is balance as well as total method. That is total and balance method. Remember, it's a combination of total and my balance method. Combination of total method and balance method, when you prepare, you call total and balance method. So you have your debit total, credit total, and your balances. That is debit balance and credit balance. So 4 columns will be having. Remember this? Yes. So these are your basics of accounting process. And when you're doing accounting process, we also learned different kind. There's a different type of problems based on accounting equations. Remember? Yes. What is my accounting equation? It is equity plus liabilities is equals to assets. Equity plus liability is equals to assets. Remember? Now, this only we expanded it and said equity plus long-term liabilities. Yes. Equity plus long-term liabilities is equals to fixed assets plus current assets minus current liabilities. Remember? So only thing what I'm doing, see, in my earlier equation was equity plus liabilities is equal to asset. A liability, I split it as long-term liabilities and current liabilities. Yes. So equity plus long-term liabilities is equals to, yes, is equals to what? 1 second, people in the waiting room. Adike 7 o'clock banni, ava waiting room alli irala alva. Yes, equity plus long-term liabilities is equals to my fixed assets plus current assets minus current liabilities. Remember this equation, everybody? Yes. So this is my basics of accounting process. Correct? After this, what did we learn? We learned subsidiary books. Correct? We learned what are subsidiary books. Subsidiary book is also like my journal only, correct? Subsidiary book. Yes, my specialized. When do I maintain a subsidiary book? When there are numerous voluminous transactions, correct? When there are numerous and voluminous transactions, that is when we prepare subsidiary books. Yes. Now,
Yes, sir.
what are the different kinds of subsidiary books we learned?
Just for purchase return bills.
Purchase returns,
Sales returns, and
Bills
bills receivable, bills payable, and journal proper. Yes, so I will repeat. Listen. First, cash book, purchase book, purchase return, sales book, sales returns, bills receivable, bills payable, and journal proper. Yes, these are the different kinds. Now, there can be n number of subsidiary books. This is only a most commonly used list that I have listed out now. Yes, these are the most commonly used subsidiary books, but there can be any number of subsidiary books, everybody. Yes. All right. Now, what do I mean by principal book? So this is subsidiary book where first transaction, yes, where the subsidiary book is the place wherein it is recorded first. Correct. What do I mean by principal book? The principal books are the books wherein information is furnished to prepare financial statements. Correct. Where further information is furnished for the preparation of financial statement called principal books. So basically, your principal books are nothing but your ledger accounts. Everyone remembers, principal books are nothing but your ledger accounts. Now, let us understand one by one. First, purchase book. What is recorded in purchase book?
Credit purchase.
All the credit purchases.
Goods only. Yes, credit purchase of goods only. Very important. First, it should be a credit purchase and it should be goods. So, credit purchase of fixed assets, where will it come?
Fixed
Yes.
assets.
Journal proper.
Journal proper. Yes. Journal proper. It will not come in my purchase book. So it should be a credit purchase. Cash purchase, where will it come?
Cash book.
Cash book. It is cash purchase of goods or cash purchase of fixed assets or any cash purchase will come in cash book. Very simple. However, if it's a credit purchase, there are two possibilities. If it is credit purchase of goods, it will come in my purchase book. Credit purchase of other than goods will come in my journal proper. Will come in journal proper. Yes. All right. Similarly, sales book. Credit sales of goods only. Yes. It should be a credit sale and it should be goods. Only then it will come in my sales book. If it's a credit sale of fixed asset, it will again come in my journal proper. If it is cash sale, again it will come in my cash book. Everyone remembers this? Yes? All right. Next. Sales return or inwards book, correct? Sales return is nothing but my inwards book. Sales return book or sales inwards, right? Inward book. When is it? What is recorded in sales return book? Only those
Credit
Customer returns the goods.
Yes, wait. Very simple. It is what? If it is recorded earlier in sales book, only then you will record in sales return. Yes, that means what? It should have been a credit sale of goods earlier. Only in such a case, only those goods, only such goods when it is returned, you will record it in what?
Sales return.
Yes, everyone remembers this. All right. So similarly, again, purchase returns or purchase outward book. Yes, purchase return or outward book. Yes. Again, what is recorded here? It should have been earlier recorded in purchase book. Yes, earlier it should have been recorded in purchase book. That means it should have been a credit purchase of goods earlier. Only when such goods are returned, you will record in purchase returns book. Yes. Now, what is issued in case of a sales return? You issue a credit note. Remember, you issue a credit note. In case of a purchase return, you issue a debit note. Yes, we issue. What do we issue? We issue debit note. All right. Next. So then, what is recorded in journal proper? All the transactions which are not recorded in the earlier subsidiary books. That is, either it is not recorded in cash book, purchase return, sales return, bills receivable, bills payable, or any other subsidiary book that you have maintained. If it is not recorded in any of this, then you record it in journal proper. Yes. Then you record it where? You record it in journal proper. Clear?
Yes, sir.
Yes, sir.
1 second. Yes. Right. Next. What could be certain examples of the transactions that are recorded in journal proper? Your opening entries, closing entries, yes, rectification entries, transfer entries, adjusting entries, right? And other entries, other miscellaneous entries. Yes, these are some of the examples that are recorded in your journal proper. Clear, everyone? Yes?
Yes.
This is my subsidiary book. Next we learned what are cash book. Yes, what is cash book? Correct. So again, cash book is treated as both. It is treated as both subsidiary as well as principal books. Yes, it is treated as both subsidiary as well as principal book because it is the book wherein first entry is made. Correct. It is the book wherein first entry is made. Therefore, it is a subsidiary book. Also, it acts as a ledger account in itself. Therefore, it's a principal book also. Correct. Therefore, it is both. Yes, Vaishnavi, it is both subsidiary as well as principal book. It is both subsidiary as well as principal book. All right. Next. So, what are the different types of cash book? Simple cash book. Yes. Again, single column. This is nothing but my single column cash book where total of debit is always greater than total of credit. Remember this? Yes. So cash book will always have a debit balance, right? So this is my simple cash book. Then you have two column cash book wherein it can be cash or discount or cash and bank. Yes. Normally, if I've given you first preference should be given to discount. Remember? Yes. First preference give to discount. So cash and discount column. When two column cash book is prepared, called two column cash book. Here, Discount column, is it balanced or total?
Total.
Total.
Because it is a nominal account. Nominal accounts are normally total, correct? And your real and personal accounts are normally balanced. So
Balanced.
here it is totaled and it's taken to its respective ledger account. Yes. So discount column on the debit side is what? Discount allowed or discount received?
Discount allowed.
Allowed.
Column, it is discount.
Received.
Everybody remembers this? Yes. All right. Next, you've got triple column cash book, wherein you prepare cash, bank, as well as the discount column. Yes, cash column, bank column, as well as the discount column. And here the special point to be noted is your contra entry, correct? Wherein both your cash as well as bank account is involved. Yes, so normally cash withdrawals and cash deposits, your contra entries, you will be entering this. That's a special treatment to be given, wherein entry will come both on the debit as well as the credit side in cash or cash as well as the bank column respectively. And in your ledger folio, you will mention C. Yes, you will mention C to indicate that it is a contra entry. Yes. Next, you have your petty cash book. Next, what do we have? We have petty cash book, wherein it records all the small cash payments, correct? Why do we maintain a petty cash book? To reduce the burden on the main cash book. Yes, to reduce burden on the main cash book, we prepare petty cash book, and it is the this is periodically transferred to cash book. Yes, and it is periodically transferred to cash book. Next, you have your impressed system, right? You have impress system, wherein what? At the beginning of every month, amount spent in previous month will be given to the petty cashier. Remember? Yes. So if 1,000 rupees is to be maintained, correct? So if 1,000 rupees is given to the petty cashier, and if I spent 750 rupees, then the next period, opening in the main beginning of the next period, you will give the petty cashier 750, so that he will have 1,000 rupees again to spend for that next period. Correct? So this is my impressed system. And then you have your analytical cash book, correct? You have analytical cash book. So what do you mean by analytical cash book? You have one receipt column and multiple payment columns. Yes, so you will have different accounts there, all the petty cash expenses, stationery, transportation, etc., where all those columns are totaled and not balanced because they are nominal accounts. The total of such accounts are taken to the respective accounts. Remember this? Yes, this is my analytical petty cash book. All right. And then last concept what we learned in this chapter was your this thing, credit or debit card sales. Remember, credit sales and credit card sales and debit card sales. Credit card sales and debit card sales is nothing but or equivalent to cash sales itself from the perspective of the seller, because as soon as you swipe the card, he's getting the amount in his bank account. Therefore, it is equivalent to a cash sale. Only thing to remember is how do I account for the commission? Correct. So normally when the sale is done, what will be the entry? Bank account debit to
Sales.
account. Bank account debit to sales account. And the commission, how do you record? Commission account debit to bank account.
Bank account.
Commission account debit to bank account. This is my credit and debit card sales. Yes. All this is the summary of my accounting process, subsidiary books, and my cash book. Cash book is also a subsidiary book, but we learned it as a separate chapter. Yes. So this is my summary. Everybody recall this now? Yes.
Yes, sir.
Yes.
Yes, sir.
All right. With that, let us move on to the next chapter, your important chapter from the perspective of examination. Say from now onwards, all are important: depreciation, average due date, account current, inventory, sale on return or approval basis. Yes, all these 5 chapters we'll be discussing in depth. Okay. First, I'll go through the theory, and then for all the upcoming chapters, we'll go through the problems also that is given in your revision book. Yes, revision material everybody has received?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Yes,
Right.
sir.
So
Yes.
first, no, yes. All right. So depreciation, correct? Before learning depreciation, what did we learn first? We learned what is property, plant, and equipment. Remember PPE? Yes.
People.
What do I mean by property, plant, and equipment? Yes. They are tangible assets. First one, what do I say? As soon as I say PPE, they are tangible assets, correct? Tangible items that are held for use, correct? That are held for use in the production or supply of goods or services or both. Yes. So first thing is what? They are tangible items that are held for use in the production or supply of goods or services or both. Next, for rental to others or for administrative purposes. Yes, keep your videos on. One by one, off material. Keep your videos on. Yes. Property, plant and equipment are tangible items that are held for use in the production or supply of goods or services or both, for rental to others or for administrative purposes, and main thing, are expected to be used during a period of more than 12 months. Yes, expected to be used for a period more than 12 months. Yes. All right. So this is my property, plant and equipment held for use in the production or supply of goods or services for both, for rental to others, for administrative purposes, and are expected to be used for more than a period of 12 months. That is my property, plant and equipment. Then we learned what is depreciation. Depreciation is the systematic allocation of depreciable amount of an asset over its useful life. Remember? Yes. Depreciation is what? Systematic allocation, right? Whichever method you use, it could be SLM, it could be WDV, units of production, etc. But it's a systematic allocation of depreciable amount of an asset over its useful life. What is depreciable amount? It is the asset cost other than or amount substituted for cost less its residual value. Remember this? Yes, it is the cost of the asset or other amount substituted for cost less its residual value. So cost minus residual value is the depreciable amount. When you systematically allocate the depreciable amount over its useful life, we call it depreciation. Yes. What is useful life then? Yes, useful life is the period over which an asset is expected to be available for use by an entity. Yes, period over which an asset is expected to be available for use by an entity, or number of production units expected to be obtained from the asset by an entity. Yes, it's the period over which it is available or the number of production units expected to be obtained from the asset by an entity. This is my useful life. Now, what could be the reasons for depreciation? Yeah. So main first one is what? Wear and tear. Correct? Wear and tear, and then efflux of time, obsolescence, depletion, etc. Correct? Remember this. Yes, your wear and tear, efflux of time, obsolescence, depreciation, depletion, etc. These are your reasons for depreciation. Remember? Next, we learn what are the factors for depreciation. Correct? What are the factors? There is nothing but your formula for depreciation. Your cost. Yes. Cost.
Residual value.
Residual value.
And
Estimated life.
useful life. And useful life. Wherein your cost and residual value is estimated. Remember this? Correct? Cost and residual value you will estimate.
Yes.
All right. When does depreciation begin? Yes.
So when we bring the asset to current location and condition.
Yes, but first before that, what is it? When it is,
They should be ready to use.
when it is available for use or when it is ready to use. Remember this, when it is available for use, not just you've started using. As soon as it is available for use, you can start the depreciation, right? Even if you remember my example I had given you, if you had purchased a truck and you've kept it in your garage but not used it, doesn't mean that it is not being depreciated, right? That is one of the reasons for depreciation is efflux of time. So as soon as it is available for use, you will start depreciating the asset, right? And obviously you should write when it is in the location and condition necessary for it to be capable of operating in the manner intended by management. Yes, so you will write when it is available for use. That means what? When it is in the location and condition necessary for it to be capable of operating in the manner intended by management. I hope all of you remember these wordings, correct? I've repeated it time and again. All right, next, your depreciable amount can be allocated over the useful life mainly based on two ways. That is the period over which it is used, correct? One is based on the period or production volume in each year. That is your units of production method, right? This is the main two ways. Remember? Yes. Your
Yes.
depreciable amount can be allocated over its useful life based on period over which it is used or the production volume in each year, right? So this is my basics of depreciation. Next, we also learned what is component based depreciation. Remember? Yes.
Yes, sir.
You can depreciate an asset based on the components, right? So when do I account? When do I recognize? When do I record separate components of a property, plant and equipment? For this, there are two conditions I told you guys. Yes. First condition is the cost of the component should be significant cost in terms of when compared to the total cost of the item of the PPE. Yes. So the cost should be significant, and second is the estimated useful life or depreciation method should be different when compared to the other items of the PPE. Yes, when compared to the other items, the cost should be different. So what is the example I give you? Best example is your aircraft, wherein your maybe the engine useful life is different when compared to the body of the aeroplane, correct? So your body can be recorded as a separate component. Engine of the aircraft can be recorded as a separate component. Both of them have significant cost when compared to the other item, and as well as the useful life of the body of the aircraft can be different when compared to the useful life of the engine of the aircraft. Remember this? Yes. This is my component based PPE. That is, when do I account a PPE as a separate component? Yes. Now, each item of the formula, that is cost minus scrap value by useful life, we learned it in depth. So there we also learned what do I mean by cost. Yes, what do I mean by cost? Or cost includes the following. Cost includes the Madhumita. Cost includes the following: purchase price, including non-refundable taxes. Yes, your purchase price including non-recoverable taxes. Any cost that is directly attributable to bringing the asset to its present condition and location, it will form part of cost. And your initial estimate, remember this. Now, third point, most of you will forget. Concentrate. Initial estimate of the cost of dismantling or removing the asset and restoring the site on which the asset is located. Remember? Yes, your initial estimate of what will be the cost to dismantle the asset and restore the site on which the asset is located. Yes, all of this will form part of my cost. Yes, all of this will form part of my cost. Next, we learned what are the different methods of depreciation. Yes, SLM, your straight line method, correct? Next is your WDV method or written down value method or diminution balancing method or your units of production method. These are your main methods. Then obviously you have learned sum of years and all of those things which will revise one by one. So your SLM is also called as fixed installment method. Remember why? Because every year the charge of depreciation is the same, constant. It is based on my original cost, right? Original cost minus my scrap value divided by useful life is nothing but depreciation based on my SLM. Yes, that is my straight line method of depreciation. Yes, that is my straight line method of depreciation. Next. Right. Next, we learned WDV. WDV is based on my book value. Remember, everyone? Yes, WDV is based on my book value. So whatever is the closing book value of the previous period, on that you will be calculating the depreciation, and that is called as diminishing balance method or written down value method. We also learned that when in case of WDV, there is a balancing charge. Remember? Yes, balancing charge, because when your depreciation keeps reducing, your repairs start increasing, and therefore there's a balancing charge to the P&L. Yes, I discussed this point with the help of an example. So your WDV has a balancing charge because when the depreciation decreases over the life of the asset, the repairs of the asset will increase. Okay. What is the journal entry for depreciation? Yes, anybody? What is the journal entry? Depreciation account debit to fixed asset account. However, when provision for depreciation account is maintained,
Depreciation account
Depreciation
debit to
to
provision.
Account debit to
Provision for
provision for
depreciation account.
depreciation.
Depreciation account debit to provision for depreciation account. And your provision for depreciation account, what type of account is it? Personal, real, or nominal? Yes.
personal accounts.
Nominal.
Very simple. Is it a liability or asset? It's a liability. Liability means it should be a person.
Personal account.
Yes, it should be a person. All right. Next, how do I account for your profit or loss on sale of asset? Yes, whenever your book value is less than your sale value, what will it be? It will be a case of
Profit.
profit. Whenever your book value is lesser than your sale value, it is a case of profit. When book value is more than your sale value, it is
Loss.
What do I mean by book value? Original cost minus
Depreciation till date.
Depreciable amount.
depreciation till the date
Depreciation till the
asset is
date.
sold. As on the date the asset is sold, you need to compute the depreciation. That is my book value. So you cannot consider book value as on the opening date. If you're selling on 30th September, you will take book value as an opening date and depreciate till 30th September. Whatever is the book value as on the date of sale, from that you will minus the sale value and find out whether it is profit or loss. Yes. Yes. All right. This is my profit or loss. How do I recognize profit or loss? Next is whenever there is a change in the method of depreciation, correct? It is stated as what? Change in accounting estimate or change in accounting? Yes.
Estimate.
It is a change in
Changing
accounting
accounting.
estimate. Correct. If any change in accounting estimate, what is the effect will give? Prospective or retrospective?
Prospect.
Prospective.
Prospective.
So a change in method of depreciation will be treated as a change in accounting estimate, and a prospective effect will be given in your books of account. Right. Next, your change in useful life or estimate of useful life. Again, it is a change in accounting
Estimate.
estimate. Useful life is also an accounting estimate. So change in useful life is also treated as a change in accounting estimate, and again prospective
Effect.
effect is given. Again, prospective effect is given. All right. Next, what are the other methods of depreciation we learned? First one is your sum of years of digits method. Remember? Yes, sum of years of digits method. Right. So what is sum of years of digits method? Based on the number of years, we'll be calculating the depreciation. For that, we learned a formula. Right. Cost into number of years remaining as on the beginning of the period. Remember this, very important. Yes, cost into number of years remaining as on the beginning of the period divided by total sum of all the digits of the life of the asset. Total sum of all the digits of the life of the asset. For this, we learned another formula. What is the shortcut formula to find out the total of the sum of all the digits?
Into n plus 1 by 2.
Into n minus 1
divided by
plus.
2. Excellent.
N
N
plus 1 by
into n plus 1 divided by 2. Right? So cost into number of years remaining as of the beginning of the period divided by sum of all the digits of the life of the asset, that is n into n plus 1 divided by 2. Next, we also learned machine hour rate method. Here, very simple. Instead of taking the number of years, you will be taking the machine hours. Correct. So, there is what we will do. Total depreciation is allocated among the total productive hours of the machine. Yes. Everyone understanding? Are you able to? Yes.
Yes.
Everyone understanding?
Yes,
Yes.
sir.
Okay with the pace? Everyone?
Yes, sir.
Yes,
Yes,
sir.
sir.
Yes, sir.
All right. So total depreciation is allocated among the total productive hours of the machine, and in place of estimated life, estimated total hours of the machine would be considered. Yes, estimated total hours it will be considered. That is my machine hour. Next is production units method. Yes, again here very simple. It is depreciated based on the number of units expected to be produced, expected to be obtained from that machinery. Yes. So how do I do this? Production units method is total depreciation is allocated among the total number of units to be produced, and therefore depreciation in a year would depend on number of units produced in that year. Yes. So number of total value of the depreciation of the machinery into number of units produced in that year divided by total units expected to be produced over the life of the asset. This is my production units method. Yes. This is my production units method. And next is my depletion method. When is this used? Normally when natural resources, yes, very good. When natural resources are involved, that is like minerals, forest, then forest, granite quarries, etc. Again, similarly, again here also depreciation is very similar. You allocate the depreciation on the total natural resources, correct? Say 1 lakh kg is there. So divided by 1 lakh kg multiplied with the natural resources that is extracted during that year, right? So proportionately you will be charging the depreciation. All right. Next, last concept, important concept I told you guys, right? May not be so important from foundation perspective, but very important from a CA perspective, because every level of your CA this comes, that is your revaluation of property, plant and equipment, correct? Revaluation of property, plant and equipment. So I've given you guys a chart for this. Yes, so if you can recall, there are two kinds of revaluation. One is upward revaluation and downward revaluation. When do I call it or say it to be an upward revaluation? When you're valuing or revaluing the asset upward, that is more than the original cost, you call it upward revaluation. Whenever it is lesser than the original cost, you call it what? Downward revaluation. Yes. So upward revaluation, I told you guys, right? Prudence concept, right? Account for all anticipated expenses and losses, but don't account for anticipated incomes and gains. Yes, your upward revaluation is nothing but it is a gain, right? But and it is anticipated. Have I actually sold the asset? I have not. You're anticipating based on your market value, or could be any other value. Yes, so you're anticipating. Therefore, you do not take it to profit and loss account. Right. So any upward revaluation, asset value increases, asset will debit or credit? Debit. So asset account is debited, you will credit not P&L because of your prudence concept. You will credit something called as a revaluation reserve account, right? So asset account debited to revaluation reserve account. In case of a downward revaluation, because of prudence concept, account for anticipated expenses and losses. So you will credit the asset. Asset value is reducing means obviously you will credit the asset, but you will debit P&L account. Yes, in case of subsequent upward revaluation, that means earlier it was downward. Subsequently, you are doing upward revaluation. Then what will you do? To the extent of earlier downward revaluation, you will credit P&L account. See, upward revaluation means whether it is subsequent or first time, asset will always be debited. There is no question about that. What you credit is a question mark, correct? In case of a subsequent upward revaluation, to the extent of P&L account debited earlier, yes, you will credit P&L account, and the balance, if any, will be credited to which account?
Revaluation reserve.
Yes, revaluation reserve account. And subsequent downward revaluation, that is earlier upward, now you're doing downward. So obviously to the extent of earlier upward revaluation, debit revaluation reserve account. Yes, because you need to nullify the revaluation reserve account first. So debit revaluation reserve account to the extent of earlier credit, and balance, if any, will be debited to
P&L account.
And credit in case of a downward revaluation will always be asset account itself. Yes, remember this, everyone. This is your summary of depreciation chapter. I've covered almost every point. Okay, now let us go through your CAPS revision material. Okay, let me open the revision material. 1 second. Yes. So first we'll go through the theory, whatever is given. I'll just glance through the theory and then we'll solve a couple of problems. Yes. Yes, everyone can see the screen, right?
Yes, sir.
Yes, sir.
So this is what I told you. Accounting process, nothing but recording in a journal, including subsidiary books, then classifying based on ledger, and then summarizing. R2C, yes, I remember. Yes, recording, classifying, and summarizing. Right. That is my accounting process. Then we learned what is the different types of cash book, that is your single column cash book, double column cash book. Here they have written discount and cash. I told you first preference given to discount and cash, but even cash and bank, if you write, it is still double column cash book only. Okay, so whenever they ask you in the examination, I would suggest you to write both. Okay, yes. Now, 3-column cash book, yes, that is discount, cash, and bank, all are there. Petty cash book, day-to-day expenses or the small petty expenses are recorded. You have simple and analytical and also impressed system. Impressed cash means what? I told you, whatever is given in the previous month, yes, whatever is given in the previous month will be, whatever is spent in the previous month will be given at the beginning of the next period. Okay, now, rules for preparing trial balance, yes, balances of all assets. So all of this, you know, debit, all the debit balance you take on debit side, all the credit balance you take on the credit side. That is my trial balance. And then there are number of subsidiary books. We learned just now what are the different kinds of purchase book, sales book, purchase return, bills payable, etc. Classification, we learned what is the golden rules of accounts. Yes, we have already discussed this. And then this is your cash book in a summary, your single column, double column, that is cash and discount or cash and bank. Yes, don't miss this point. Triple column cash book, then you have 3 columns there, cash, bank, as well as discount column. And special point is contra entry. Yes, you have to mention C there. Correct. You can write down there. C is to be mentioned in the ledger folio. Correct. C has to be mentioned in the ledger folio. And then discount column is not balanced, rather totaled and transferred to the ledger account. Debit side is, here you can write discount alarge debit, discount received you can write credit. Yes, debit column and credit column. Debit column and credit column. Ali, write down accounting equation there only. Whatever is not covered there, I'll just give you brief. Accounting equation is equals to equity plus liabilities is equals to assets. Equity plus liabilities is equals to assets. Below that, expand this equation. Equity plus long-term liabilities. Equity plus long-term liabilities is equals to fixed assets is equals to fixed assets plus current assets minus current liabilities. Fixed assets plus current assets minus current liabilities. Yes, where here where trial balance is mentioned, right? Or here only there only you can just write down methods of preparing trial balance. Methods of preparing trial balance. 3 arrow marks. Total method, then balance method. Last one is total and balance method. Total method, balance method, total and balance method. Under the total column, you write down. Under total column, write down. Do not consider closing balance. Do not consider closing balance, that is balance carried down. Do not consider closing balance, that is balance carried down. Yes. All right. Purchase book and sales book, write down. Right? Purchase book, put a hyphen and write credit purchase of goods only. Credit purchase of goods only. Sales book, put a hyphen and write credit sale of goods only. Credit sales of goods only. Okay. Sales return book, put a hyphen and write Earlier recorded in sales book. Earlier recorded in sales book. Full stop and write. Credit note issued. Credit note issued. Yes. Next. Sales book. Sorry, next purchase book. Purchase return book. Purchase return book. Put hyphen and write. Earlier recorded in purchase book. Yes. Earlier recorded in purchase book. Debit note issued. Debit note issued. Okay, everyone? All right.
Yes, sir.
Next, let us open depreciation chapter. Yes. Right. No, whatever is not covered here, only that I will dictate. First, let me just go through this. Everybody, look at your book. Yes, it's a permanent and gradual and continuous decrease in the value of depreciable assets. It is compulsory non-cash expenditure, right? You don't have an option, right? Depreciation has to be accounted. Depreciation rate is given in Schedule 2 of the Companies Act based on useful life of the asset. Yes, that is important. Useful life. It's based on useful life. SLM depreciation is of equal amount, and at the end of the value will be equal to 0. Yes, SLM, because fixed installment, value will be equal to 0. However, WDV normally end value will not be 0. It will not become 0 because it's a percentage of my opening book value. Because the percentage is not 100% depreciation, normally doesn't become 0. WDV is suggested since there is equitable charge. Remember this balancing charge, right? Over the use over life of the asset, that is under WDV, initially depreciation more and repairs is less, and then at the end depreciation is less and repairs will be more. Okay. Factors is, this is important, mark this important: cost, estimated scrap, and estimated useful life. Cost, estimated scrap value, and estimated useful life. Causes or reasons of depreciation, I told you guys, it's wear and tear, efflux of time, obsolescence, depletion, etc. Okay. These are the reasons for depreciation. Methods we learned: SLM, WDV. First one, this is see, whenever they ask in the examination, right? Whenever they ask in the examination, you will write SLM, WDV, and first you will mention the units of production. Okay, now production units method. Your production units, SLM and WDV. Others are others. Okay, your main first three will be this: SLM, WDV, and production units method. Okay, only if you want to put a serial number 1, 2, and then 3, production units method. Right? All right. So obviously a depreciation method, depletion method, I told you, it is normally for wasting assets. Example, mining, etc. That is natural wherever natural resources are involved. Any change in depreciation, that is depreciation method, change in life, all are change in accounting estimate. Yes, all are change in accounting estimate, and therefore the effect is given prospective. Yes, therefore prospective correction is done. All right. Next, as per AS 10, when is component method done? Again, I've given you. Yes, here component based accounting based on useful life of each part of the asset. Example, aircraft and plane, engine life is 10 years, body could be 6 years. You have different useful life and cost is significant. At that time, you do depreciation for each component separately. Depreciation assets, like depletion, that is wasting asset, again same point. Amortization is for intangible assets. Yes, amortization is for intangible assets or fictitious assets. So depreciation is for your property, plant, and equipment, which are tangible assets. Your intangible assets. What are your intangible assets?
which cannot be seen or touched.
Yes. I think your short form is there. Sir, I would have told. All right. So that will be amortized. That will be amortized. AS10, again, there's a definition of your property, plant and equipment, which we discussed. They are tangible items that are held for use in the production or supply of goods or services or both, for rental to others, for administrative purposes. Here, underline. Yes, underline here. Held for use. Held for use in the production or supply of goods or services or both, for rental to others, administrative purposes. Okay, and more than 12 months. An item of property, plant and equipment that qualifies for recognition as an asset should be measured at its cost, and we discussed what is cost, right? Purchase price, duties, any taxes which are not recoverable, then any cost that is directly attributable to bring the cost to this present location and condition also mentioned there. Write down. Alle continue Madi. Yes. Cost or initial estimate of cost of dismantling. Initial estimate of cost of dismantling or removing the asset and restoring the site. Initial cost or initial estimate of cost of dismantling or removing the asset and restoring the site on which the asset is located. Okay, that point was not covered there. All right. Yes. Yes, more or less all the other points are done. You can just write down a formula of sum of years of digits method. Write down sum of years of digits method. Depreciation is equals to cost into number of years remaining. Within bracket, write down as on beginning of the period, divided by total sum of all digits of life of the asset, divided by total sum of all digits of life of the asset. Within bracket, write down n into n plus 1 divided by 2. N into n plus 1 divided by 2. N into n plus 1 divided by 2. All right. Okay. Just open the problem section. Depreciation. Yes. Page. Yes, depreciation.
60.
Yeah. Yes, one of you read the problem.
May I, sir?
Yes.
Mrs. Dayal Transport Company purchased 10 trucks at 50 lakh each on 1st July 2017. On 1st October 2019, one of the trucks is involved in an accident and is completely destroyed, and 35 lakh is received from the insurance in full settlement. On the same date, another truck is purchased by the company for the sum of 60 lakh. The company writes off 20% of the original cost per annum. The company observes the calendar year as its financial year. Give the motor truck account for 2 years ending 31st December 2020.
Okay. Yes. So similar problem. First problem what I had solved in the depreciation chapter was similar to this only. Yes. So you have 10 trucks at a cost of rupees 50 lakh each on
45 lakh,
first.
sir.
Yes.
First one to 45 lakh ittu.
ಅಯ್ಯೋ ಬಿಡೋ ನಾನು ಸಿಮಿಲರ್ ಹೇಳಿದ್ದು ಸೇಮ್ ಪ್ರಾಬ್ಲಮ್ ಹೇಳಿಲ್ಲ ಹಾ ಮೆಸೇಜ್ ದಯಾಲ್ ಟ್ರಾನ್ಸ್ಪೋರ್ಟ್ ಕಂಪನಿ ಪರ್ಚೇಸ್ 10 trucks at 50 lakhs on 1st July 2017. Yes, so I told you, as soon as you see a depreciation problem, what are the first things you need to note? First is the method of depreciation and your period for accounted. Here, which is the financial year or calendar year?
Calendar year.
Very important. And second is a depreciation method. What is the depreciation method here?
SLM.
SLM, because it's original cost, correct? So you immediately make a note of that. Okay, as soon as you see a depreciation problem, right? So here it is on original cost, so SLM method, and next is your calendar year. This is important, right? So here 1st July 2017. Now on for this is when it was purchased. They have given that you need to prepare the motor truck account for 2 years ending on 31st December 19, which means what? Which 2 years? 18, 19 and 19, 20, which means we need the opening balance as on 1st January 2018. Remember? I mean, 1st January 2018, we need the opening balance. Everybody. Okay. Now, here they've given 50 lakh was purchased as on 1st July 2017, correct? So we need to use this. So from here, we need to calculate what is the closing balance as on 1st April 18. Remember? Yes? Able to understand? Okay. On 1st October 2019, one of the trucks is involved in an accident and is completely destroyed, and 35 lakh is received from the insurance in full settlement. Yes. So for this, what we'll do, we'll do a working note for computation of profit or loss. Yes, come down now. Look at this. Profit on settlement of truck. Yes, we're doing the computation here. Original cost as on 1st July 2017, how much? 50 lakh, correct?
50.
Next, you do depreciation for the year 17-18. For how many months? Only 6 months, because
it was purchased
on 1st July.
Purchased on 1st July. So for 6 months, 20% is for 1 year, Andre. 10% for 6 months, that is 5 lakh, correct? That yes. So don't tell 10%, it will be 20% divided by 2. Yes, for 6 months, so 20% divided by 2. So you can say 5 lakh, 45 lakh. Next, for 17-18, you will calculate the depreciation, correct? That is for the financial year 2007. So next year, depreciation is how much? Either 2018 agbeku, not 17. It should be 18. Depreciation for 2008.
for full
Yes.
year, 12 months.
For full year, yes. Why? Because why full year? Because when is the asset sold?
1st October.
1st October 2019, correct? Next year it is sold. Okay. So obviously full year depreciation you will do. Right? Again, this is very important. Mark this important. It is on original cost. Don't do on 45 lakh. Yes. This is on original cost. On original cost. So 50 lakh into 20% is 10 lakh. Yes.
10 lakh.
Therefore, your WDV as on 1st April 18. This is also important. Why is the second 35 lakh important?
So because it is the WDV for that year 2018.
That is what I will take as my opening balance. Remember? Yes. So that is why I don't have to do a separate working note for computation of opening balance. Here only we have done. Got it? 35 lakh. Next. Then you will do depreciation for 9 months. Again, very important. See what most of you would have done here is, I'm telling you the mistake right now. October is given, correct? 1st October, you will be used to financial year April to March, and you will take 6 months. Don't do that. This is calendar year. So you have to compute depreciation for 9 months. Okay. Depreciation for 9 months is worth 50 lakh into 20% into 9 by 12. You get 7 lakh 50,000. When you minus 27 lakh 50,000, you have got from this. So the book value as on the date of sale is 27 lakh 50, right? The amount received from insurance company is 35 lakh. Therefore, profit on settlement of truck is 7,50,000. Everybody understood this? Yes. Profit on settlement of truck is 7,50,000. Now we need the opening balance. Opening balance, again, market important. It's not just for one truck. It should be for 10 trucks. Yes. You are supposed to prepare a motor truck account, entire motor, not for one truck, but for the entire property, plant and equipment, right? That is an entire motor truck class of asset. So you will calculate opening balance for 10 trucks. So it will be 35 lakh into 10. Yes. So this is nothing but here 35 lakh into 10. Got it?
Sir, it will be 50 lakh into 10, no, sir?
Original cost as on 1st July 2017. This is what 1st Jan 2018. This don't write 2019 like this. This is not right.
So
Okay.
then it is 45 lakh only, no, sir?
Where?
On 1st Jan 2018.
1 second. This is for which year now? For the 2 years ending 31st December 2020. You're supposed to do for, they have done only for 1 year.
Yes.
Got it. 2019, sorry. 2019 andre 1st Jan 2019 ತಗೊಬೇಕು. 2019 and 2020. Okay. So, but don't write the date here. This is wrong. Okay. I will get confused. ನೀವು individually you write 1st Jan 2019, 1st October 2019, and here it will be 1st Jan 2020 and 31st December 2020, 31st December 2020. Don't get confused. Confusion better. Because if you put a line like this here, itara line hakadre, it can imply it is for the entire column. Okay. So presentation aspect, even if you do like this, don't put a line. Then you have to close this line here. Here also you have to close. Only then you can write here. Okay. Sorry. So 2 years andre 18, 19 and 20. So 19 andre, yes, you will take 35 lakh itself. So 35 here. This 35 lakh, correct? Into 10. So you get 3 crores 50 lakh here. Yes, 3 crores 50 lakh. Profit on settlement of truck, we have done the working note, correct? Profit on settlement of truck 7 lakh 50. Bank account is 35 lakh. Yes. Therefore, depreciation on loss of assets we have done here. Yes, 7 lakh 50,000. That is what you take here. Next, we need to do depreciation for the remaining 9 assets. For that, let us do a working note here. Okay. So depreciation for 2018 for the remaining 9 assets. Again, remember, it is on SLM basis. Yes, it is on SLM basis, straight line method. So 50 lakh into 9 into 20%, you get 90 lakh. Then on new truck, it will be 60 lakh into 1 into 20%. When is the new truck purchased? On the same date when it is sold. Yes. So it will be for balance 3 months. Yes. There it is 9 by 12. Here it is 3 by 12. So 60 lakh into 1 into 20% into 3 by 12, you get 3 lakh. Therefore, your depreciation is 93 lakh. That 93 lakh, you will take it here. Okay, now. Yes, everybody is understanding. So 93 lakh is taken here. Therefore, your balance carried down, you compute 2 crore 82 lakh. That will become opening balance. So next period on all 10 assets, you will calculate. But remember, 9 assets is 50 lakh. 1 asset is 60 lakh. So 60 lakh into 20% and 50 lakh into 9 into 20%. Same thing is done here. 90 lakh and 12 lakh. 1 crore 2 lakh is the depreciation, which you will take it here. And then you calculate what is the balance carried down. Everybody understood?
Yes, sir.
Yes, sir.
Okay. Next. See, next is a theory question. Discuss the factors taken into consideration of calculation of depreciation. Remember the factors. One is cost, then your estimated useful life and estimated scrap value. Remember, are they cost? Individually we have given. I have explained you what is cost, what is estimated useful life, what is scrap value. Adanne they have expanded a step. So if you see this cost of the asset, what does it include? Installation, commissioning, trial run. Then what is the cost of a depreciable asset represent its money outlay or its equivalent? That is cost or amount, other amount substituted for cost. Yes, you will definitely get marks. Don't worry. Cost or other amount substituted for cost is nothing but this, right? In connection with this acquisition, installation, commissioning, as well as additions for improvement thereof for the purpose of increasing efficiency. Okay, now alle you can write more. What does cost include? What does cost doesn't include? So briefly you explain what is cost. Remember, next is estimated useful life. Yes. So I told you what are the two ways. One is the period over which, and next is the number of production units. Adane same thing they have given here. Okay. And then they've given you more, what is the determination of the useful life is a matter of estimation. Remember this? It's a matter of estimation and is normally based on various factors, right? Including experience with similar type of assets. Several other factors are taken, that is estimated working hours, right? That's your machine hours, then production capacity, repairs and renewal, etc., are also taken into consideration on demand on the demanding situation. Okay. Next, your estimated scrap value is calculated at the end of the useful life. Now, estimated scrap value, if any, is calculated at the end of the useful life. If such value is considered as significant, it is considered as insignificant, right? Then you consider it as nil. Okay, now small value means instead of taking the small value, take it nil. On the other hand, if it is significant, then it is reduced from your original cost, right? That is what is nothing but a depreciable amount over that is, and the depreciable amount you allocate over the useful life. Okay, now that is a simple theory. Next, a firm purchased an old machinery for 37,000. Okay, on 1st January 2015 and spent rupees 3,000 on its overhauling. Now, 3,000, will it form part of cost? Yes or no?
Yes, sir.
Any amount that is required to bring the asset to its present location and condition, it is required. It is a second and old machinery without overhauling expense. Can I use or can I make it available for use? No. Therefore, that 3,000 I will add. So therefore, the total cost of the machinery will become 40,000.
40,000.
Next, on 1st July 2016, another machine was purchased for 10,000. On 1st July 2017, the machinery which was purchased on 1st January 2015 was sold for 28,000. Correct? Huh? So 40,000 you are purchased. You will do depreciation for the remaining period till as on 1st July 2017 and then find out whether it is profit or loss. And the same day, a new machinery costing 25,000 was purchased. That is on 1st July 2017. On 1st July 2018, the machine which was purchased on 1st July 2016 was sold for 2,000. So you purchased it for 10,000, you're selling for 2,000. Okay. Next, depreciation is charged at 10% per annum on straight line method. The firm changed the method and adopted diminishing balance with effect from 1st January 2016. So only till 1st January 2016 it will be SLM. After that will be WDV. Yes, and the WDV rate is 15% per annum. The books are closed on 31st December every year, which means what it is? Calendar year. Calendar year. Prepare machinery account for 4 years from 1st Jan 2015. Yes, 4 years. So here, if you notice, because it is SLM, right, and WDV, both two methods, different methods are there. Yes, all assets purchased after 1st Jan 2016 will be simple on WDV basis. Correct. However, whichever asset is purchased before 1st Jan 2016, which asset is that? The first one. 40,000 one will be. What we will do is we'll have 3 columns for 3 different assets. Yes, we'll have 3 columns for 3 different assets and then we'll solve. So open your notebook. We'll solve this problem. Yes. So I will be showing the answer from here, but I want you guys to write down because I want little slight difference in the presentation and some corrections here. Okay, write down. Working note number 1, computation of book value of machines. Working note number 1, computation of book value of machines. Yes, all of you done? 3 columns, right? Particulars, machine 1, machine 2, and machine 3. Particulars, machine 1, machine 2, and machine 3. Everyone done? So first is for 2015, what is it? The cost of machinery. Cost of machinery, within bracket write down 2015. Yes. How much?
40,000.
40,000.
37,000 plus 3,000.
Write down how you got 40. 37 plus 3,000. Yes. Write down 37,000 plus 3,000. 40,000. Done. Next. Less depreciation for 2015. Less depreciation for 2015. When was the asset purchased?
1st January.
1st January. So entire year depreciation will be doing. Yes. So depreciation for 2015 will be 40,000 into what?
10%.
10%.
10%.
Right? 40,000 into 10%. Right now. Show the computation. 40,000 into 10%. 4,000. 4,000. Therefore, below that, write down book value as on 31st December 2015. Book value as on 31st December 2015. 36,000.
36,000.
36,000. Okay. Next, in 2016, 15 is done. Next, in 16, what has happened? On 1st July 2016, another machine was purchased for 10,000. Correct. So therefore, below that, write down purchase of machinery. Right? Purchase of machinery. Put a hyphen and write 1st July 2016. Put a hyphen and write 1st July 2016. Right? Yes, in the machine 2 column, write down 10,000. Machine 2, write down 10,000. Okay. Below that, write down less depreciation for 2016. Less depreciation for 2016. Now, in the year 2016, which is the method of depreciation?
WD.
WDV. Change in the method of depreciation is a change in accounting estimate.
Prospective is.
Therefore, you give a prospective effect. So whatever has happened earlier, you forget. Right? You will not be considering that. Only from now onwards, you will be considering. Okay. Yes. Write down. So depreciation for 2016 in machine 1 column. Right? Yes. What will be the depreciation?
36,000 by 100.
3,000.
Correct. Write down. 36,000 into 10% into 15%. 36,000 into 15%. How much?
5,400.
5,400. 5,400. And on 10,000, what will be the depreciation?
15%. Into number of months of purchase.
Into number of months. Yes, Subiksha, what is the amount? 750.
6
Yes.
by 12.
Into 6 by 12, that is 750. Write down 750. Therefore, now book value as on 1st April 2017. Sorry, 1st January 2017. Book value as on 1st January 2017. Yes. How much? 36,000 minus 5,400. That is 30,600. Yes. 30,600. And in the machine 2 column, 10,000 minus 750. That is
9,250.
9,250. 9,250. Next. Yes. When is the next machinery purchased?
1st July 2007.
Next is purchased on. Correct. 1st July 2000.
70.
Check the question properly. Yes. And sold
The
and
sold-
same day. Correct. So first one, I repeat. 1st January 2015, first machine was purchased. Remember? 1st July
Yes.
2017, another machine was purchased for 10,000. And on 1st July 2017, the machinery which was purchased on 1st January sold for 28,000. And on the same day, a new machinery costing 25,000 was purchased. Correct. So what is the date? 1st July
2017.
2017. Right. So purchase of new machinery. Right. Below that. Purchase of new machinery within bracket.
1st July 2017.
Yes. Within bracket 1st July 2017. Yes. So this is in the machine 3 column. Correct. Machine 3 column. Write down 25,000. Write down 25,000. Now, machine 1 was sold on which date?
1st July 2017.
1st July 2017. Therefore, we need to compute the depreciation for machine 1 for 6 months. Yes.
Yes, sir.
Machine 2 was sold on which date?
1st July
2018.
18. Therefore, for 2017, entire year depreciation will be calculated. Right. So now write down depreciation for 6 months. Right. For 6 months, put a hyphen and write 1st July 2017. 1st July 2017. Yes. Only in machine 1 column you will write. What's the depreciation?
2295.
2295. How did you get 2295? 30,600 into
15% into 6 by
15%
into
6 by 12.
yes. How much is that?
295.
2295. 2295. Yes. Below that, write down book value as on 1st July 2017. Book value as on 1st July 2017.
28,305.
28,305. Correct. 28,305. Below that, write down less sale proceeds.
28,000.
28,000. Next. Therefore, loss on sale of asset rupees
305.
305.
is 305. Next, depreciation for 12 months. Depreciation for 12 months. Yes. Now in machine 2 column. Machine 2 column.
1387.5.
How much?
1387.5, which is 1388.
1388. Yes. In the machine 2 column, write down 1388. Right? In machine 3 column, 25,000 into
15% into 6 by 12.
15% into 6 by 12. Yes. How much?
1875.
1875.
1875. Therefore, next to write down WDV as on 1st January 2018. Correct? WDV as on 1st January 2018. In machine 1 column, how much will it be?
0.
0. Machine 1 column 0. Machine 2, how much?
7862.
786.
Machine 2 column, write down 7862. Machine 3 column
23,125.
23,125. 7862. Then 23,125. Done. Yes. Next. Purchase, any purchase during 2018?
No, sir.
No. Correct.
No.
Any sale during 2018?
Yes, sir.
Yes, sir. Machine 2.
Yes. So write down. So now sale is on which date?
1st July 2018.
28. So you need to compute depreciation for
6 months.
So write down depreciation for 6 months. Depreciation for 6 months. Put a hyphen and write 1st July 2018. Correct? 1st July 2018. Compute the depreciation for machine 2 for 6 months.
589.65.
599.65, 590.
Yes,
Yes,
sir.
rupees 590. Yes. Below that, therefore, write down WDV as on 1st July 2018. How much?
270.
7272. Write down 7272. Below that, write down less sale proceeds. Less sale proceeds
2000.
2000. Less sale 2000. Therefore, loss on sale of asset
5272.
5272. 5272. Yes. Below that, next line is depreciation for 12 months. Depreciation for 12 months. Yes. Machine 3 depreciation calculate.
3468.75, which is 3469.
3469.
Is 3469. How did you get 3469, everyone? 23,125 into 15%. Yes, 23,125 into 15%, that is 3469. Therefore, next line will be WDV as on 31st December 2018.
19,656.
Yes. So machine 1 is 0. Machine 2 is also now 0. Machine 3 is 19,656. 19,656. Is everyone done? Aste. So this way you do, easy it becomes. Okay. Right? If you have this working note, then now very easy, where you can easily solve and make the, draw up the ledger account. Yes. So the next one, if you see ledger account, now you check your working notes with this. This you have to do at home. Okay. Now we'll just cross verify all the entries in the books of the firm machinery account. 1st Jan 2015, 37,000 and 3,000. Everyone got this? Yes.
Yes.
That is 40,000. Right. Then depreciation 4,000. Is it matching?
Yes, sir.
Yes. So closing balance is 36,000. Next, to balance brought down 36,000. By depreciation account, now add both the depreciation columns. 5,400 plus 750, correct?
Yes, sir.
So that is your 6150. Your purchase of machinery is 10,000 during the year. Balance carried down is 3,600 and 9,250. You total you get 39,850. Yes.
Yes, sir.
Yes. 46,000, 46,000. That 39,50 you bring it down. Right? Bank account, you purchase 25,000 new machinery. Sale 28,000 you got. Yes. Profit,
Yes,
loss of 305 is there. Depreciation for the year, we have computed each of these individually. Yes or no? 2295, 1388 and 1875. Add it 558. 5,558. Everybody is getting 8. Yes.
Sir.
558. To balance carried down, now add both the closing balances 7862 and 23125. You got 30,987. 64,850, 64,850. Get this down. Then you have got a sale of 2,000, loss of 5,272. Yes, depreciation for that year. Don't forget this 590 and 3469. Don't forget the 6 month depreciation. Remember this 590 plus 3469, 4059. Therefore, balance carried down 19,656. Matching.
Yes.
Yes, sir.
Sir,
Don't refer this. Idana refer Bedi. Refer what I've done. Solpa illi, answer correct agide, but presentation is a little left right. That's why I solved. Okay.
Yes.
Yes.
ಓವರ್ ಹಾಲಿಂದ ನಾವು ರಿಪೇರ್ಸ್ ಅಂತ ಕೂಡ ರೆಕಾರ್ಡ್ ಮಾಡ್ಬೋದಾ?
Repairs, no ma. Repairs Allah. All the expenses till the asset is available for use. It will not be repairs. Yes. Till the asset is available for use, even if I have to pay, say, I call the mechanic to come and install. Later on, to fit to tighten the nuts and bolts. I've given you this example. After that, it is available for use, become repairs. But until the point it is available for use, you will capitalize. Right?
Okay.
After it is available for use, all the things will be normally taken to P&L account until and unless, what is the exception? If it is
used for increasing the lifespan.
Increasing the life of the asset. Yes, remember this point, everyone. When you capitalize after it is available for use, only if the repairs is major in nature and is affecting the useful life of the asset, helping to improve the useful life of the asset, only then you capitalize. Remember? Yes. All right. So next one, simple question. Right. A plant and machinery costing 10 lakh is depreciated on SLM basis, assuming 10 years working life. Okay. With zero residual value for 4 years. At the end of the 4th year, the machinery was revalued upwards by 40,000. The remaining useful life was reassessed at 8 years. Depreciation for the 5th year we're supposed to calculate. So first 4 years, we have to do the depreciation. Depreciation per year charged for 4 years will be how much? 10 lakh by 10, correct? Earlier useful life was 10. Therefore, 10 lakh by 10, 1 lakh. For 4 is you multiply, you get WDV will be 6 lakh. Yes. Now it is revalued upwards by 40,000. Therefore, you will add 40,000, become 6 lakh 40. We do only prospective change rates. Here they have not given notes. I would expect you to give notes. Right? Give a note. Change in your depreciation method is a change in accounting estimate. Yes. Therefore, only prospective effect should be given in the books of account. Yes, change in accounting what change in
Depreciation method.
Depreciation method.
Depreciation method.
depreciation method. Change in the useful life. Sorry. Change in useful life is a change in accounting estimate. Change in useful life is a change in accounting estimate. Therefore, prospective effect is given in the books of account. Therefore, prospective effect is given in the books of account. Yes. So prospective means what? You will forget what has happened. You will just consider the opening value for that year, which is 6,40,000. You will divide by 8 years, and therefore your depreciation will be 80,000. Yes. So from 5th year onwards, your depreciation amount will be 80,000. With that, we complete depreciation chapter. Okay. Yes. Now, you want to break now or after average due date and account current?
Sir, ಇವಾಗ್ಲೇ
Average due date.
ಈಗಲೇ ಬೇಕು ಸರ್.
No, sir.
Okay. Take 10 minutes break. It is how much? 8:25 now. 8:26. 8:36 will resume. Okay.
ಸರ್
Okay.
8 ಬಿಡಿ ಸರ್ ಹೋಗ್ಲಿ ಪರವಾಗಿಲ್ಲ.
8:36. Yes.
Thank you, sir.
ಈಗ ಬ್ರೇಕ್ ಕೊಟ್ಟಿದ್ದಾರೆ ಪಾಠ ಮಾಡಲ್ಲ. అవును.
ಕ್ಯಾರೆಟ್ ಬೀಟ್ ಕೊಟ್ಟಿದ್ದೀನಿ.
Yes. Come back.
Yes, sir.
Yes,
Yes,
sir.
sir.
Yes,
Yes,
sir.
Yes, sir.
Yes, sir.
Yes.
Yes. Yes, ಹೇಳ್ತಿದ್ದೀರಾ ಹಂಗೆ ಆನ್ ಮಾಡಿ ಕ್ಯಾಮರಾಸ್. It's okay, you eat in front of the cameras, no problem.
Sir, sir, network issue, sir.
ನಿನ್ ನೆಟ್ವರ್ಕ್ ಇಶ್ಯೂ ನನ್ನ ಕ್ಲಾಸಲ್ಲಿ ಆಗುತ್ತೆ. ನಾನು ಯೂಟ್ಯೂಬ್ ಅಲ್ಲಿ ತೋರಿಸ್ತಾ ಇವಾಗ ನಿನ್ನೆ ನಿಂದು ಫುಲ್ ಕ್ಯಾಮರಾ ಆನ್ ಇತ್ತು ಶೆಟ್ಟಿ ಸರ್ ಕ್ಲಾಸಲ್ಲಿ. ನೋಡಲ್ವಾ? ಎಲ್ಲ ನನ್ನ ಕ್ಲಾಸಲ್ಲಿ ನಿಂದೆಲ್ಲ ನೆಟ್ವರ್ಕ್ ಇಶ್ಯೂಸ್. ಶೆಟ್ಟಿ ಸರ್ ಕ್ಲಾಸ್ ಇವಾಗ ಯೂಟ್ಯೂಬ್ ಹೋಗಿ ತೋರಿಸ್ಲಾ ನಾನು ಯಾರ್ಯಾರು ಕ್ಯಾಮರಾ ಆನ್ ಇಟ್ಟಿದ್ದೀರಾ ಅಂತ. ಸ್ಕ್ರೀನ್ ಮಾಡ್ಲೇನೋ? ಅವ್ರ ಕ್ಲಾಸಲ್ಲಿ ಏನ್ ನೆಟ್ವರ್ಕ್ ಇಶ್ಯೂ ಬರಲ್ಲ ಎಲ್ಲರಿಗೂ. ಆನ್ ಮಾಡ್ರ? ಎಸ್. ನೋಡು ಇವಾಗ ಹೆಂಗ್ ಸರಿ ಆಯ್ತು ನಿನ್ ನೆಟ್ವರ್ಕ್. ನೆಟ್ವರ್ಕ್ ಭಯ ಆಗುತ್ತೆ ಅಮ್ಮನಿಂದ. All right. So the next chapter, average due date. Yes. So we learned, average due date, account current, inventory, and sale on approval. These 4 chapters are pending, which I'll be completing in the remaining hours. Okay, now. So average due date. Let us start with average due date now. What is average due date? Yes.
Equated date on which total payment can be made.
Equated date on which total payment may be made in lieu of different payment on different dates without any loss to either parties. Correct? It is the equated date on which total payment may be made in lieu of different payment on different dates without any loss to either parties. Yes, what does it mean? So instead of having multiple payment dates, I arrive at one date on which a total payment can be made to set off the balance that is there in the, to set off the balance in such a way that no party should have either profit or loss without any loss to either of the parties. That is my average due date. Yes. From this we learn what is the formula for calculating the average due date. It is the base date, yes, plus or minus sum of products by sum of amount. Yes. So what is this? We are using weighted average concept here. Correct. So wherein weightage is given to the amount also and not just the number of days. So if you do simple average based on number of days, you will not get average due date. Average due date you will get only when you consider the amount also. So your product is number of days into my amount divided by sum of amount. So sum of product by sum of amount. Number of days is calculated from which date to which date?
So we'll actually exclude the date of transaction and from next date till the last.
Which date that is? Till my
Closing.
Due date.
Yes, base date and the due date. This is what you calculate. So from the base date till the due date, you compute the number of days. Yes. Now here what did I say? You will either include the base date or the due date, but normally for consistency, what did I tell you?
We should exclude the date of
The date.
Yes. Include or exclude?
exclude.
Include the date of transaction, sir.
Exclude the date of, no, transaction is different. I'm talking about base date now. Yes.
Exclude base date, sir.
Exclude
Base
base
date.
For uniformity, I told you exclude the base date. However, but please remember, sometimes while minusing, sometimes I add and arrive. Yes. When is the base date? When is the due date? When am I subtracting? Okay, is my network fine?
Yes, sir.
Yes, sir.
Everybody falls. Okay. So normally, so what did I say? Either base date or my due date. One of them things should be excluded. For uniformity, you can exclude the base date. I told you. You remember? Yes. All right. So the formula is base date plus or minus sum of product by sum of amount. Right. And you calculate the number of days from my base date till the due date. Next, we learned certain important, points to be remembered while computing the due date. Yes. Now, if it is payable on a specific date, then what will be the due date?
So same date, sir, but
That's
if the
specific
government
Yes. So if it is payable on a specific date, then that specific date will be my, due date. If it is payable after X months, yes,
Date
the
remains safe
retirement
until
of
the
that
month.
X months.
date on which such X months expires is the date on which it expires. Yes, everybody. So if it is 3 months, correct? If it is 1st May 2021 and if I give you 3 months as the tenure or the credit period, then my due date will be what?
July 1st.
August.
1st August to 5. I
August.
told you very simple. Whatever is the number of months, for that you add the credit period of 3 months and then just copy paste the date. Remember this? Yes. However, you have to be careful when it is February. Yes. February also it will be same only. Do not consider different date. Yes. However, now if they say 31st May, everyone, if it is 31st May and if the credit period is 3 months, then
31st August.
31st August. If it is 31st August and if the credit period is 3 months,
30th
31st
30th November.
November.
So obviously, if 31st is not there in that month, then you will consider 30. Yes. Then you will consider.
Yes, sir.
All right. Next, when it comes to number of days. So this was number of months. If it is payable after certain number of days, then what will you do?
Exclude date of transaction until due date.
Yes. So you normally exclude the date of transaction and then you add the number of days. Yes. So you exclude the date of transaction, and again here it is the date on which such X days expires. So you will exclude the date of transaction and then you will add the number of days. And clear, everybody? Yes. Next, if the due date falls on a public holiday, then
Preceding working.
Working
working day.
Working day.
If on the due date a sudden holiday is declared due to emergency or unforeseen circumstances,
Next
Working
day.
then you consider the next working day. In case of bills of exchange,
Plus 3 grace days.
grace days have to be added. In case of bills of exchange, 3 grace days have to be added. Yes. Now, if payment is made before the average due date, yes, what will you do?
Discount is given.
Discount or rebate is given. Yes. If payment is made after the average due date,
Interest is
correct, interest is calculated. Now, how do you calculate the interest or the discount as the case may be?
After the due date.
Yes. How do you calculate? What is the formula for computing?
Amount into interest rate into number of months of delay.
Yes, in number of months of delay from which date?
due date.
From the due date. And it is a total sum. Please remember, I have told you guys time and again, do not take the product. Yes, average due date, when you're computing the interest, you need to take the total of the sum column. Total sum into the number of days of delay or number of months of delay, correct? From the average due date into the interest rate. Yes, divided by whatever, divided by 12 or divided by 365 as the case may be. But what you need to remember is it's calculated the amount, sum of amount and not the product. Yes, alle redding kali wherever average due date is there. Okay, I'll dictate it when I'm doing this thing. Just remind me when I'm going through the theory. I'll dictate that. Okay, I'll red tinkle will write. Next, right? And the last one is what? When it is paid in installments. Again, very important to remember. It should be equal installments. Yes.
Yes, sir.
It is paid in equal installments because installments are equal. Weightage is equal. Yes or no? Therefore, I can use simple average instead of weighted average.
Yes, sir.
Therefore, I can use simple average instead of weighted average. Therefore, the formula will be what? If a loan is given, then average due date will be date of loan plus date of loan plus the number of days. What number of days? From average
Due date.
Date of
average due date is date of loan plus the number of days. What?
From the date
the
of
date of
cancellation.
From the
loan.
date of lending the money till the date of repayment. Yes, from the date of lending till the date of repayment divided by
Number of
Total number of days.
total of such number of days. Yes, everybody remembers this. That is my average due date. All right. Right. Open your theory of the revision material. Average due date, I think page 39.
40.
Yes, 40. Yes. Average due date is the equity date on which total payments may be made in lieu of different payments on different dates without any loss to either party. Yes. Steps in computing of average due date: ascertain the due date of each transaction, then decide a base date. Yes. Generally, the earliest due date is considered as base date. However, put a hyphen and write here. Base date can be any date. Correct? It can be any date. There is no rule here. Any date can be considered. Anything for that matter. Yes, any date you can consider. However, what do we do? How do we compare? What will be the base date you will consider? I had given you certain rules for this, or certain tips.
Sir, we have to
Date
consider
of the first transaction.
occurred many
Date of first transaction if it is not given in the question, and if there is.
Sir, many number of transactions happen on the same day.
Whenever you find most number of due dates or common due dates, right? Multiple due dates being the same thing for different transactions, you take that as the base date, because computation is very easy. You'll have more number of zeros. Yes, number of days from base date will be 0. So alle hyphen hakbidbari. If not specifically given in the question, consider if not specifically given in the question, consider base date as common due date or same due date for multiple transactions. Consider the common due date or same due date for multiple transactions. Yes, understood this point? Yes.
Yes.
If there is, if continue after that, if all due dates are different, then consider
The first day.
due date. Then consider the first due date as the base date. Then consider the first due date as the base date. Okay. And the formula we all know is base date plus or minus sum of product by sum of amounts. Okay.
Sir, could you repeat the last sentence again?
Yeah, one of you can you read whatever I've dictated?
If all the due dates are different, consider first due date as base date.
Thank you.
All right. Yes. Right. Ascertainment of due date. Right. If it is payable on a specific date, then such specified date. Yes. If it is payable on a specified date, then such specified date. Next. If payment after X months, then date on which such X months expires, right? If invoice date is 1st April 2021 and credit period is 2 months, then due date is 1st June 2021. 4 plus 2, simple. Next, if payment is after X days, then date on which such X days expires. If invoice date is 1st April and credit period is 30 days, then due date will be 1st May 2021. Correct. Wherein you exclude the date of transaction. Yes, here put a hyphen and write X days again, write down, put a hyphen and write exclude date of transaction. For this, yes, Shreya, for this point, write down exclude date of transaction. For this thing, write down exclude date of transaction. Done. Yes. If due date falls on a public holiday, then preceding working day. If due date falls on a day which is a holiday due to unforeseen or emergency circumstances, then it is next working day. For bills of exchange, the due date shall include 3 days of grace days. Yes. Where amount is repaid in installments, put a bracket and write here equal installments. It has to be equal. See, if the weightage is not same, then it is not going to work. Okay, weightage has to be same, so it has to be equal installments. This is applicable when amount is lent in one installment, repayment happens in various installments. Then the formula is date of loan plus sum of step 2. That is what? Find total of such number of days per month or years. That is, for each repayment, you will calculate the number of days from the date of lending till the date of repayment. Okay, you add that, that will be total, and then you find out the sum of step 2 best number of installment, that will give you an average. Okay, yes, that is my theory. Now open your problem section.
Sir, you said something you will dictate, like in
Yes, Ali, write down. Interest per rebate is calculated on the total of amount, and not on the sum of products. Yes, calculate on the total of amount and not on sum of products. Below that, write down interest is equals to total of amount into number of days from ADD. ADD is average due date. Number of days from ADD divided by 365 into interest rate. Yes, it could be number of months also. If it is number of months, you divide by 12. Okay. Yes. All right. Alle, if you want, write down. If payment is done before ADD, there on you can write down. If below that, if payment is done before ADD, put hyphen and write discount bar rebate. If payment is done after ADD, hyphen and write interest. Put a hyphen and write interest. Okay. Put a hyphen and write interest. All right, that's it. Now go to the problem section. Average due date. Page number 83, I think. Yeah. Yes. Everyone found it? Page number 83 of the problem section,
Yes, sir.
average due date. Okay. November 2020 examination. Akash had the following bills receivable and bills payable against Mukesh. Yes. So here, whenever there is both bills receivable and bills payable, what will be the formula? Anybody remembers? Base date plus sum of the difference in the product. Yes, sum of the difference in the product by sum of difference in amount. Remember, difference in the product by difference in amount. That's what. So the base date for both should be same. Base date that you consider for bills receivable as well as bills payable should be same. That is important. Okay. Yes, write down. So, okay, we'll go through the problem first. Then I'll give you a note on this bills receivable and bills payable. Akash had the following bills receivable and bills payable against Mukesh. Okay. So bills receivable, they've given the date. This is the date of the transaction or date of the bill, and this is the amount, and this is the tenure, right? So tenure, 1st June and 3 months. What will happen? What will be the due date?
September 1st.
1st September.
1st September or 4th September?
4th September.
Forget 3 grace days. This is bills receivable, bills payable. So 1st June, only for 3 months. So 1st June. So 6 plus 3 is 9. Right? So 9 is added, plus 3 is added to the date. 1st plus 3, 4th September. Yes, same thing, Ramakrishna. 5th June, 3 months, it will become 8th September. Yes,
8th September.
3 days. Yes. Next, 9th June, again 1 month will become July. So 9 plus 3, 12, 12th July. Everybody is able to understand? Yes.
Yes, sir.
20th June, 3 months, again it will become how much?
15th August. 14th August.
15th August is an Independence Day, that public holiday. Therefore, you take 14th August. Yes.
Yes,
14th August. And your last one, 20th June will become 23rd September. Okay, these are your due dates. Then next, what they have done is, see, we will not be doing like this. Okay, we will write the base date after doing the 2 tables. Okay, because we will see what is common in both and then consider. Remember? Yes. So they have done first. What we'll do, we'll do the table first. And here, see, they have avoided 3 columns here. One is the date. Next is the tenure and date column and tenure column. They have avoided. No, sorry, 2 columns. Amount column we'll also write. Yes. Date and tenure they have not written. Normally what we do, we write the date, we write the tenure, we write the amount. Remember, then we calculate number of days from base date, then we do the product. Yes, you follow my format itself, becomes easier so that you don't do errors. See, ಇವಗ ಇಲ್ಲಿಂದ ಇಲ್ಲಿ ನೋಡ್ಕೊಂಡು ಇಲ್ಲಿ ಮಾಡುವಾಗ there's chances you might do error. Okay, ಅಲ್ಲೇ ಪಕ್ಕದಲ್ಲಿ ಇದ್ರೆ how long will it take just to write 2 columns? 5 seconds. So do it. Clear? Yes. So then bills payable, again same thing. 29th May, 2 months. So May 2 months ಗೆ add ಮಾಡಿದ್ರೆ ಎಷ್ಟಾಯ್ತು? 7 plus 2, sorry, 5 plus 2, 7, but 2 days. Then 3 days you add to that, you become 1st August. Remember? Yes. Yes, so that will become 1st August. Next, 3rd June will become. Yes, 7th September. Very important, because here remember this is a unforeseen. So next working day. Okay, there is a sudden holiday. So next working day, and 9th June will become
12th July.
12th July. Here my 12th July is the common due date. Therefore, sorry, no, idalla illi. 12th July is the common due date. Therefore, that I will consider as my base date. Yes. So this 12th July I'll consider as my base date.
Yes.
So once that is considered, so obviously this will be 0, correct? And so that will be 0. 12th July will be 0. Then you will compute from 4th September to 12th July. Yes.
Yes, sir.
4th September to 12th July. So how many days in September then? Yes, do the computation. September, how many days?
30.
Right?
26.
30 minus
34 minus 4.
minus 4. So
26.
26 days.
26.
Next, October.
31.
Yes. Sorry. This is base date 12th July till here. No, sorry, it
Yes,
will not be this.
Yes,
So
sir.
you have to come from July. July, how many days?
31 days minus 12, 19 days.
19.
19 days. Yes, July is 19 days. August,
31 days.
31 days.
September 4.
September,
4.
4.
September 4 days.
Yeah.
4.
Yes, sir.
Yes, September 4 days. So when you total, you get 54 days. Everyone knows this? Yes. So
Yes,
same way
Yes,
when you
sir.
do, you will get 58, 33 and 73 days. Okay. You will get 58, 33 and 73 days. Then you find the product of this. Same way you do for bills payable, find the product of that. And when you find out the difference, oh, they have not done here. They have not continued. Okay, write down. Continue the answer here. Write down. Base date is equal, sorry, average due date is equals to, write down the formula. Average due date is equals to base date plus difference of sum of products divided by difference of sum of amount. Base date plus difference of sum of product divided by difference of sum of amount. Yes. What is the sum of product?
3,02,000.
Yes, write down. Difference in the sum of product will be 5,46,600 minus 2,43,800.
2,000.
No, 3,06,800. Is it?
2000.
3,02,800 divided by difference in the sum of amount
4,100.
4,100. Yes, tell me.
74 days.
74 days.
74 days. Write down 74 days. Therefore, base date plus 74 days, correct? Base date plus 74 days. How will we do this? Yes, remember. So you write down first. Write down. I will tell you.
19
Total
plus 31.
days. Write down total days. 74. Correct. Total days 74. Then in July, how many days you'll consider?
19.
19.
19
Right?
days.
July 19. July 19. August
31.
31. September
24.
24.
yes. So August plus July is
50.
19 plus July 31. How much? 50.
50.
Write down 50. Therefore, balance will be
24.
24.
24 days.
Therefore, what is your average due date?
September 24.
September 24.
Average due date is 24th of September. Average due date 24th of September. Done, all of you? Yes.
Yes, sir.
Next question. See, simple question. Look at this. Ee tarano questions barutte. Current purchase goods from Arjun. The average due date for the payment in cash is 10th March 2018. Idun scratch madi. 10th March 2018. Okay. And the total amount due is 1,75,800. How much amount should be paid by current to Arjun if the total payment is made on the following dates and interest is to be considered at the rate of 15% per annum? Okay. If it is paid on the average due date, yes, tell me what should be the amount? Interest or rebate, as the case may be?
No interest or rebate.
No interest, no rebate. Yes, our nodi calculate madidare. We don't have to calculate also, correct? So the total amount to be paid is actually same as the amount due. That is 1,75,800. Clear? Next, if it is paid on 28th August, is it before or after the average due date? After 10th August is the average due date. It is paid on 28th August. Means how many days delay?
18 days.
18 days.
Minus 10. Very simple. 28 minus 10, 18 days. So for 18 days on 1,75,800, you will calculate the interest. So if you check here, 1,75,800 into, why have they taken 15? 15% into 18
interest, sir.
correct. 15 by 100 into 18 by 365, 1,300. Total should be 1,77,100. Clear, everyone? Yes.
Yes, sir.
Yes,
So
sir.
your then payment on 29th July, obviously it will be a rebate situation. Rebate. So what is the number of days from 29th July to
10th August.
10th August? It is 12 days.
12 days.
Okay. 12 days. So into 12 divided by 365, 867 is the rebate. This you will minus from 1,75,800. You get 1,74,933. Simple. Yes.
Yes.
Aste. Concept there. Nothing much. Okay. Next question. Next page. Yes. Mehnaz accepted the following bills drawn by Shehnaz on 8th March 2018. Okay. 4,000 for 4 months. So first one is 8th March 2018, 4,000 for 4 months. Then 16th March, 7th April, 17th May. Okay, now all of this, if you check here, transaction date they've written here. Okay, due date they've added whatever is the months here. Okay, and then added 3 days grace and plus 3 days grace. Clear, everybody? 3 plus 4 months. 3 plus 4 7. So 8 plus 3 11. Okay, same way they've done due date. Therefore, whatever amounts are given, they've written here. Number. Then they found what is this? This is not amount.
Number of days.
Scratch this. Write down number of days from base date. Number of days from base date. Number of days from base date. Done. Okay. Then this is product. Write down this is product.
Amount into number of days.
Yes, amount into number of days. Okay. So found out the product 8,96,000. So you know the formula, average due date is base date plus total of product, sum of product by sum of amount. 8,96,000 by 20,000, that is 45 days. So when you add 45 days to 19th June, you get 3rd August. Clear?
So that is base date plus or minus total of product divided by total of amount.
But in this case it is plus, right? It is plus. Yeah.
Yes.
So here now, listen. Now this is why I'm discussing this problem. Till now it is simple, everybody knows. Now listen. He wants to pay the bills on a single day. That is the average due date. It can be paid on average due date also. However, Interest is charged at 18% per annum, and Mehnaz wants to save 157 by way of interest. Okay, she wants to save rupees 157 by way of interest. Calculate the date on which she has to effect. He has to effect the payment to save interest of 157. Okay. Now, how do we calculate? Very simple. Look here now. Mehnaz want to save interest of 157. The yearly interest is how much? 20,000. That is sum. Correct. I told you interest is also calculated the total of the sum amount. Yes, Shashank. 20,000 into 18%. Interest is 3,600. Correct. Interest is 3,600. Assume that days corresponding to interest of 157 days are y. We don't know how many days. Correct. Assume it to be y. Therefore, 3,600 into y by 365, you get 157. Yes. Into y by 365, you get 157. Therefore, your y, when you solve for it, you get 16 days. Okay, now. When you solve for y, you get 16 days. Therefore, now look at the answer. Hence, if Mehnaz wants to save 157 by way of interest, she should prepone the payment of amount involved by 16 days from the average due date. Hence, she should make the payment on 18th July. That is 3rd August minus 16 days. Everybody understood this? Simple? Little different kind, but simple. So, mark this important. The adjustment, now make sure you solve it before the exam. Okay. Little different kind of adjustment is, but simple. Ain't complicated in okay.
So can we use even trial and error method for this?
Why you want to? My question is why.
Sir, here directly we know the amount and the base date. If we don't know that, we have to check for each and everything and then calculate.
What you don't know? What you think you not know? Not which situation are you talking about?
Sir, here they have given the date of transactions and we know the base date. So we can directly apply. If we don't know the base date.
If you don't know base date and the average due date compute ಮಾಡ್ತೀಯ. Yes.
Okay, sir.
So that is not the situation. And here anyway, what you need is the average due date. If base date you consider agilla 157 ಗೆ. Am I considering base date anywhere? What I'm considering the average due date. Simple, right? So from the average due date, what should be the number of days you need to pay before in order to save so much amount? Basically, she wants a rebate. You got it? Everybody understood this?
Yes, sir.
Yes. All right, that's it. That is my end of average due date chapter. Okay. Next, let us start with account current. Yes. So account current is what? Tell me now.
Sir, it is an extension of average due date and even interest is calculated in the same.
Correct. So it is the extension of my average due date itself. Yes, it is the running statement of transaction between two parties, right? So it is nothing but like my ledger account itself, right? It is a form of a ledger account. Account current is a form of a ledger account, extension of my average due date. That is, it is a running statement of transaction between two parties for a given period. And most important, it includes the interest charged. Yes. Most important is what?
Yes,
it
sir.
includes the interest charge.
Interest
Okay?
charge.
It helps in confirming the balance payable or receivable along with the interest. Yes. So that is the difference now. Normal ledger account will not have interest. In account current, you have the interest column also. Therefore, you will know what is the interest payable or receivable and the final amount payable or receivable from that party. Yes. Correct. Now, normally in account current, there are two parties, right? There are two parties, one who prepares and one to whom the account current is rendered. Yes. So how will the name of the account current be?
So first to whom it is rendered will be first and giver will be next.
Then in whose books you are maintaining the account current, correct? Or who's preparing the account current. So Mr. A, if he is preparing the account current and giving it to Mr. B, then it will be Mr. B in account current with Mr. A. Mr. B in account current with Mr. A. Okay. All right. Now it is applied in many cases. I've told you, right? In case of drawings, we have done a problem based on drawings. Remember? Yes. So in case of a partner, there also we can use, or in case of a consignment, it can be used. Yes. Bank. Yes, in case of a bank, wherein the we have used a different method there of account current. There also it can be used. So wherever there's a banker and customer, it can be used. Consignments, it can be used. Wherever there's frequent transaction between two parties, you can use account current. Those are your applications of account current. Clear? Yes. Now, what are the methods of preparing account current? First one is your individual transaction method. Yes, individual method wherein interest is calculated for each transaction, correct? Each transaction. So individual transaction method or individual method, right? So first one is individual method, that is interest. Next you have by means of product, right? Your product method. Again this one, product is calculated on individual transaction or each transaction. So individual transaction, there are two. One is based on interest, one is product. Remember this? Yes. And then you also have your product by means of product of balances method or periodic balance. Remember this? Product of balances method or periodic balance method, wherein you find out the debit product and credit product. Remember this? Normally in case of banker and customer we use, yes? Normally
Yes,
in case
sir.
of banker and customer we use, wherein you find out debit product and credit product. Your credit product, you total the debit and credit product and you find out the interest for each debit and credit product separately, and then find out what is the net interest payable. Yes. Remember this? That is my periodic balance method. Next, for calculating the number of days, I told you opening balance. Do you include the opening date or exclude the opening date?
Exclude the opening.
Include the opening
the
date.
opening date.
Opening date, I remember. Yes. For opening balance, we include the opening date. I've given you the reason. Yes. If the transaction happened in the previous period and then if you had computed as on date, don't you think the opening balance would have been, opening date would have been included then, correct? So that is the logic. For on opening balance, you include the opening date. Yes. For other transactions, you exclude the transaction date. Yes. For other transactions, you exclude the transaction date. And again, for computation of number of days, there are two methods. One is forward method and second is the backward or epoch method. Forward or epoch method. On the forward method, you calculate the number of days from which date to which date, from your due date till the date of
Closing date.
closing the accounts, right, till the date of closure. And backward or epoch method, you calculate number of days from which date to which date, from the
Opening
date till the due date.
Due date.
Yes, from the opening date till the due date. Clear, everyone?
Yes, sir.
However, what you have to remember in your forward method, I told you to exclude the date of transaction. Under epoch method, what will you do?
Include the date of.
You will include the date of transaction, because if you exclude here also and under forward, then it gets excluded completely. Remember my chart? Yes, my timeline what I had given, right? It is forward. You add and you minus, correct? So at one of the places it should be included. In the backward method, you include the date of transaction. Yes, remember this. To include the all right. Right. Then we learned what is red ink interest. Yes. What is red ink interest? If the due date falls after the date of closing, if the due date falls after the date of closing, you calculate red ink interest for how many days? From the date of closure of the accounts till the due date, you calculate red ink interest. And normally we do not write in the same in negative column. In the opposite side, we will write what is the red ink interest or red ink product, as the case may be. Remember this? Yes. So that is my red ink interest. Okay. This is the theory with respect to account current. Okay. Open your caps revision material. Let's go through the theory. Yes. Page number
41.
41. Yes, page 41. Account current. Okay. Yes. So account current is a running statement of transactions, correct, between two parties for a given period and includes the interest charged. Yes. And includes the interest charged. It is a form of ledger account. It is a form of ledger account and helps in confirming the balance payable or receivable along with the interest as on the specified date. Parties in account current, there are two parties, one who renders the account and to whom the account is rendered, correct? To whom the account is rendered. Heading will be Mr. B in account current with Mr. A, because Mr. B is the one who is making the account and it is rendered to Mr. A. Okay. Methods of preparing the account current with the help of interest tables for individual method. Yes. And my product method. Yes. Here interest is computed on each transaction. Here product of each transaction, and then we compute the interest. by means of product of balances method or periodic balance method. Yes, used in case of banks normally, correct? Product of balances after each transaction is obtained and then interest is computed. Again, methods of computing number of days, Pragati, forward method and backward or epoch method. Number of days are calculated from the due date of the transaction to the date of closing the accounts. Here you write down, put a hyphen and write exclude what? Under forward method, what will you exclude?
Date of transaction.
So date of transaction while calculating the due date. Here, from due date till the date of closing, what will you exclude?
Sir, we'll exclude the date of closing the account.
No, you exclude the due date. Okay, write down, you exclude the due date. Exclude the due date. Now, under backward or epoch method, number of days are calculated from the opening date of statement to the due date of transaction. Put a hyphen and write include due date. Yes, everyone remembers this. Here you have to include the due date. Again, there number 3 you write down, not method of computing. So write down not number 3 but allegory for opening balance. For opening balance, while calculating number of days. For opening balance, while calculating number of days, include the opening date. Include the opening date. Next, redeeming interest if the due date falls after the date of closing, right? Then interest from the date of closing of accounts to such due date is called redeeming interest per negative interest. This implies that rebate or discount will be given if settlement is made as on the date of closing the statements. Okay, this is my account current. Okay, let's go through the problems. Is open.
86.
Page number 86. Account current problems. Right?
Yes, sir.
So, from the following particulars, prepare an account current as sent by Mr. Amit to Mr. Piyush. That means what will be the heading?
Piyush and account
Piyush
current
is
to
Account current to Mr. Amit as on 31st December 2020 by means of product method charging interest at 8% per annum. Therefore, it will be Piyush in account current with Amit for the period ending on 31st December 2020 at, they have not written, please write that, at 8% per annum. Correct? Remember, we always write the interest at 8% per annum. At 8% per annum. Okay. Yes. So here, balance due from Piyush. So it is debit balance or credit balance?
Debit balance.
Debit balance. So that would be here in the debit column written to balance brought down 900. To balance brought down 900. Next, sold goods to Piyush to sales. Correct? To sales 1450. To sales 1450. Goods returned by Piyush by sales return 250. Can't say yeah? Yes. By sales 250. Piyush paid by check 1200. Yes. So therefore by bank account 1200. Okay. And received cash from Piyush. So by cash account 600. By cash account 600. Here due dates are not mentioned because here credit periods are not given. So you will consider the date of transaction itself as a due dates. Correct? Everyone. You'll consider the date of transaction itself as a due dates and you'll calculate number of days. Now opening balance you'll include 1st September. Correct? And you'll calculate till which date? Till the date of closing, that is 31st December. Yes. You'll calculate till 31st December. Yes, calculate. September, how many days?
31 days.
Yes, September
30 days. 30
30 days.
30 days.
September 30, October
31.
31 days.
30 plus 31 plus
30 plus 31.
22 is 122 days. Correct? 122 days. Same way now you calculate for October 15 till 31st December. Yes. October, how many days you'll consider?
30.
31 minus
15.
15.
15 days.
50. That is
16 days, sir.
October 16, November 30, December
30,
31.
31. Therefore, you get
77 days.
77. Therefore, 77 days. Similarly, now you will calculate for these, right? You will get the amount, number of days, multiply it 900 into 122, 1,09,800, 1450 into 77, 1,11,650. You multiply, then you find out the product. Now, once product is done, you will find out the balance of the product. Yes, find out the balance of the product. So debit side is more than credit side. You will have a debit balance. So write on by balance of products, 2,21,450 minus 18 minus 46,800 minus 9,600. You get 1,47,050. Correct? 1,47,050. Therefore, now you calculate interest on this 1,47,050. What is the interest formula? Balance of product
into 8% into 1 by 365.
Divided by.
For 1 day you calculate the interest. Remember that. Yes. So mark it important. Yes. You're calculating interest only on 1 day. Yes. Divided by 366. So here again you can give a note. 2020 under they would have considered leap year. Let us check. Correct? Yes. So they have considered leap year. They have taken 3366 days. But you see, they have given alternately 365 days can also be taken. Okay. Whatever you consider, please give a note. A step. If it's a leap year, my suggestion, always give a note. Whatever you consider, so that you know, you let the examiner know that you know it is a leap year. Okay. All right. So on that you calculate 8% for 1 day, you get 32. So first you'll write the interest. Yes. Then you total this debit column. You write down here. Then you find out what is the balance of the amount column, and then you total this 2382, 2382. Yes. Now, how do you know whether interest receivable or payable? Yes, tell me.
If it is credit, it is interest receivable. If it is debit, it is interest payable.
Debtors you receive interest, to creditors you pay interest, right? So depending on the debit balance or credit balance, accordingly it will be whether interest payable or receivable. Clear, everyone? Yes. So
Yes.
this is my simple product method. Product method though. Okay. Next. Okay, this question, amounts are different. Okay, amounts and dates. What you do is based on this, based on the answer, you change the question now. So write down here balance though. This will become 1st September 2020. This make this September. Okay, and make this 900. Okay, September and 900. Then 15th October. Right, 15th October, and make this as 1450. Next, this again 20th October, make this 250. This one write down. Sorry, 20th October Allah. Correct. 20th October. Sorry, 20th October. Correct. Then you make it 22nd November. 22nd November, and write down 1200. And this will be 15th December, and make this 600. Okay, now. Yes.
Yes, sir.
Everything else is same. It's easy to compute. Okay. Same as the previous. Only thing is I just wanted to correct the amounts here. Based on this, you'll solve. You'll get the answer. Everything is same. Nothing different. Product method only they have done. Okay. Next, come to this next one. RTP problem, May 2019, question number 11B. The following are the transactions that took place between G and H during the period from 1st October 2017 to 31st March 2018. Balance due to G by H 3000, right? Then goods sold by G to H, goods sold by H to G. Andre, for one person per sale is another person's purchase. Goods sold by H to G. Promissory note given by G to H at 3 months. Okay, 5,000. Cash paid by G to H, goods sold by G to H, and goods sold by H to G. Okay, this they have given for 2017 and 2018. Drop account current up to 31st March 2018. Okay, to be rendered by G to H. Andre, what will be the heading?
H in account
H in account current.
Account current with G.
Account current with
Interest
G.
up to 31st March 2018 at what percentage? At 10% per
10%.
at 10% per annum. So now same thing again, nothing very complicated here. Balance due by G by due to G by H. Andre G should receive the amount. Andre In the books of G, is it debit balance or credit balance?
Debit balance.
Debit.
Balance. So if you see here, debit balance 3,000 is written. Okay, now next, goods sold by G to H 2,500. Yes. So two sales 2,500. Can't stay there. Yes.
Yes, sir.
Yes, sir. Goods sold by H to G and they purchase it. Yes.
Purchases.
So
Yes,
by
sir.
purchases 4,000. Yes. By purchases 4,000. Next, goods sold by H to G. Again, it's the purchase 3,500. Yes. Next,
Invoice
promissory note given by G to H at 3 months 5,000. Yes. Tell me.
ಸರ್ ಇಲ್ಲಿ ಇನ್ವಾಯ್ಸ್ ಡೇಟ್ ಅಂತ ಬಂದಿರೋದೆಲ್ಲ ಡ್ಯೂ ಡೇಟ್ ಆಗುತ್ತಲ್ವಾ ಸರ್?
No, invoice dated, right? Invoice dated 26th. 1 second. 4,000. Which one? This one. No, this is the first transaction. Correct.
Yes,
Goods sold by GH to G, 4,000 rupees. Yes. Now, what is the date of the transaction given?
16th
November
November.
16.
16th November. This is wrong. 18th October. I don't know how they have written. 1 second. The answer is wrong. It cannot be October. Okay, this is this one. Okay, 18th October. Next one is November 16, right? So purchase. Sorry. Purchase. So November 16, goods sold by H to G is purchase 4,000 rupees. Either 4,000. Yes. Whatever is invoice dated, so that will be your due date. Correct.
Okay, sir.
Invoice, so that one they have written as due date. Okay, now.
Then November 16th is date of transaction.
Actually, I see this should have been the due date normally. Invoice dated due date at the head. But anyway, so that is when the transaction has happened and they have recorded, I think. Okay, that's the date of the transaction. So date of transaction is November 16. Whatever date they've given in the bracket, that will be my due date.
Okay, sir.
Okay. Okay. Next. So drop. Okay. Promissory note. Yeah, you did tell me this. Promissory note. What will happen to this? Yes. Promissory note given by G to H. What is that?
Bills
Debit
payable.
note.
Bills payable. Yes. Everybody. Given by G to H.
Yes, sir.
Bills payable. So if you check here, bills payable. Correct. Bills payable 5,000. Okay. However, it is 3 months. 3 months from 3rd January means how much?
April 6.
April 6.
6th April, adding the 3 days of grace days. However, it is ending on 31st March. Therefore, what will be this? This
Retain
actually,
interest.
or ink madidare, but don't do this way. You have to show this in the opposite side as red ink interest or red ink product. Arthaita?
Yes, sir.
Don't
Yes,
do
sir.
like this. In the opposite column, write down. Mark it now. Mark it now only and solve this problem. Solve this problem on your own. Okay. Avaga, make sure that this comes in the credit side. Write down by red ink product. Everybody understood? By red ink product, amount will remain same, 30,000 only, but it will not be negative a step. Clear, everyone?
Yes.
Yes, sir.
Yes,
Okay.
sir.
Red ink product. Then others are easy again. Cash paid, right? So any cash that is paid will become 2 cash. Then sales has happened, so 2 sales, and then you find out interest. Interest again, balance of product. Correct? You find out what is the balance of product. On the balance of product, 1 day interest you will calculate at 10% into 1 by 365. 50 rupees is the approximate interest. So that you account here, and then you find out what is the balance carried down. Everybody understood this problem?
Yes, sir.
Anyone has any
Yes,
doubt?
sir.
The only thing is, a promissory note, but the other, don't get confused. Right? Do not get confused. Clear?
Yes, sir.
Yes, sir.
I think that's it. Okay. That concludes account current. Okay. God bless. That concludes account current. Okay. Next chapter is sale on approval or return basis. What? Sale on approval or
return basis.
Now, when is sale, approval, or return basis most commonly used in your day-to-day life? Where have you seen this most? Yes.
Amazon, Flipkart,
Amazon.
online platform.
Normally your e-commerce transactions, correct? Normally all your durable products, correct? Wherever you can use and see whether you want to keep it or not, right? So it could be your clothes, etc. In your earlier days, even some certain electronic products also were given. However, now it is not so much in use. Yes, but certain electronic products are also given. Corporate to corporate, whenever transactions happen, certain products are given on a use or return basis. Okay, they're given, they say use it for 15 days. If you like it, you keep it, otherwise you return it back to us. So anything that is given on a condition, right, where the sale is not yet final, but it will be final only on the acceptance of the buyer or on the expiry of the time period, whichever is earlier, I call it, or sale on approval or return basis. Yes. Yes, here what did we learn? Now I've given you a beautiful chart, if you remember. Yes, so there three kinds of possibilities are there. One is when it is not so frequent in transaction, that is occasionally it happens or few transaction happens, correct? Few transaction or occasional. In such a case, what do I do? When the goods is sent on sale or approval, what is the treatment to be given?
Customer account debit.
Customer
account
It is
data to sales
treated as a
account.
normal sale, therefore customer account debit to sales account. Yes. Now, whenever goods are approved, yes, whenever goods are approved, is there any entry to be passed?
No, sir.
No entry, because sale is already recognized. Whenever it is rejected, what is the entry to be passed?
Sales return to customer.
Reverse
Reverse
entry.
Yes, sales account debit to my customer account, that is a reverse the original entry. And in case of no intimation at the time when the books are closed or at the reporting date,
Stock lying
time has not expired, at that time what do I do?
stock lying
Inventory.
First sales
First
entry and
entry is reverse. First
Reverse,
entry is
reverse.
reverse the earlier sale that is recorded, that is sale account debit to customer account, and the second entry is ICSR
to trading.
debit to trading account. ICSR account debit to trading account. Yes. Now, in case whenever it is approved, yes, there are three scenarios possible. One is it can be approved at the same price at which the goods were sent. If it is at the same price at that time, is there any entry?
No, sir.
No entry.
If it is accepted a price higher than your earlier sale value, then
Customer account data to sales account.
debit to sales. If it is accepted at a lower value,
Credit.
Sales
account
sales
debit.
account debit to customer account. Sales account debit to customer account. Now, whenever there's a no intimation, I told you guys, yes, no intimation, what is the entry we pass? One is we reverse the sales, that is sales account debit to customer account, and then we recognize the ICSR account by debiting ICSR account debit to trading account.
Trading account.
Now, subsequently, in the next period, if the goods are accepted, what is the entry?
Sales entry.
Sales entry, because you have reversed the sales entry as on 31st March. Subsequently, if it is recognized, obviously you need to recognize the sale again. So it will be customer account debit to sale account. However, subsequent, if there is rejection, what is the entry?
No entry.
No
Because
entry.
it is already.
No entry, because we have already reversed on 31st March. Remember this? Yes. Next is when it is on frequent basis. Yes. When it is on frequent basis, you prepare what is you prepare a journal, correct? You prepare a journal with 4 columns, correct? Sale or approval journal you prepare, where you prepare 4 columns. First is your goods sent, correct? All the goods that is sent on approval. Then you have your goods approved, your goods returned, and balance, correct? Whatever goods are returned, what are goods are approved, and your balance. Balance indicates what? All those goods lying with my customer, right? Lying with the customer, that is the balance. Yes. Now, in case of frequent basis, your sales entry, do you recognize when the goods are sent?
No,
No,
sir.
sir.
No.
sir.
It is
Only
recognized
approval.
when the goods are approved. And in case of no intimation, is there any sales reversal required?
No, sir.
No,
So
sir.
because you have not recognized the sale earlier, therefore, what is the entry to be passed at no when there is no intimation?
ICSR account data to
ICSR
sales
account debit to trading account.
Trading account.
ICSR account debit to trading account. And if you remember here, what is the 2 ledgers we we maintain? One is a day book we maintain, and also we maintain goods sent on approval total account. Remember this? Yes. I told you, whenever you see the word total account, it means it is nothing but on frequent basis. Yes. Is there is a problem, we'll be solving that also. Next is when there are numerous transactions. Yes, when there are numerous transactions, at that time you prepare, you maintain memorandum books.
Memorandum book.
What are the records maintained in a memorandum books? You maintain sale or return day book, sale or return ledger. Yes, sale or return day book, sale or return ledger. Memorandum books will not form part of your books of account. Very important. Yes, memorandum books will not form part of your books of account. Here, now, when goods are sent in the books of account, any entry to be passed?
No,
No,
sir.
sir.
Right. In the memorandum books, what is the entry you pass?
Sales entry.
Customer to sales.
Customer account debit to
Goods and
Goods
sent.
and approval.
sent on approval. It is not sale entry. Yes, you don't recognize sales here. You credit an account called as goods sent on approval account. Clear? Now, whenever goods are approved in the books of account, what is the entry you pass?
Sales
Customer
entry.
account debit. Customer to
Account
sales.
sales account.
In memorandum books, what is the entry you pass?
Goods
Reverse
sent
entry.
approval.
Goods sent on approval account, debit to customer account. You're reversing because from memorandum books you are taking it out. Yes, what you are maintaining it is in your books of account now. Yes, so when goods are approved, you reverse the entry. When goods are rejected in the books of account, any entry you pass?
No entry.
No
No, sir.
entry.
No
In,
entry.
in memorandum books, any entry?
Goods
Again,
sent
Reverse
reverse
the
entry.
entry.
Goods sent on approval to
customer.
customer account.
Customers.
Reverse the entry. Yes, because ultimately, what is your memorandum book? What you need? You need the balance line with the customer. Yes. Right, so both approval as well as rejected, you reverse the transaction. And last one, whenever there is no intimation in the books of account, what is the entry you pass?
CSR account
No
debit to trading
Yes,
account.
debit to trading account. Memorandum books,
No
No
entry.
No entry.
no entry is passed in the memorandum books. Okay, so if you remember this much, this chart, you remember, you know the entire chapter, easily you can solve the problems. Okay, let us go through the theory. Okay, open your revision material. Sale on approval or return basis. Goods sent on sale or approval, sale on approval or return basis. Yes, page number 25. Page number 25. Yes, so now it is the process of sending the goods to prospective customers, time given test and approval of goods. Yes, so there is time that is given and approval of goods. Sale is recognized for whichever is earlier, right? Whether time has expired or they should have approved the goods, whichever is earlier, at that date the sale will be recorded. It is mainly meant for consumer durable like TV, electronic items, berry, clothes, dress, etc. Yes, garments, etc. Sales recorded on accrual or expiry of the period, whichever is earlier. Yes, whichever is earlier. Sales at sale value, closing stock at cost. Yes, closing stock will be at cost. So ICSR account will be what? Cost or NRV, whichever is lower. Remember, cost or NRV, whichever is lower for ICSR account. However, sales reversal or sales recognition will be at sales value. Stock with customers to be included in seller's closing stock. Yes, remember this, when solving inventory we have done this, right? Stock with customers to be included in seller's closing stock. Methods of accounting for sale on approval or return basis. When goods are sent occasionally, right, that is normal sales. When it is sent frequently, that time what you do, sale or return journal is maintained with 4 columns. I've told you what the 4 columns are. One is total value of goods sent, goods returned, goods approved and balance with customer. Goods are sent numerously, that time 2 memorandum books are maintained, sale or return day book, sale or return day journal. Yes,
Sir, journal or ledger, sir?
sale return day book and ledger. Sorry, make this correct, make it ledger. And sale or return ledger. This will be ledger. Yes. Next, when goods are sent on 10th March 2017 with 1 month period given, right? No entry when goods are sent, correct?
Yes.
No entry when goods are sent. Sale when it is approved or expired, whichever is earlier. On 31st March, recorded as closing stock, right? Complete this. Recorded as closing stock. If not yet approved. If not yet approved. Next. Write down. Return entries, right? After expiry of the period, sales return entry, since sales entry was already passed. Yes. Within the period, technically no entry, since no entry was passed when the goods were sent. Everybody is able to catch this and understand this.
Yes, sir.
See, they chart, whatever is given in the next chart, adunne theory formally just. Okay. While valuing the inventory, stock lying with prospective customers should be added to closing stock. Okay. Next. This chart, this is what we discussed just now. Casual or frequent or occasional basis. When goods sent to customer, customer account debit to sales. Approved, no entry. When rejected, you reverse the entry. When no intimation is received, you will reverse at selling price. Yes, cost will be at cost or NRV, whichever is less. Cost to NRV, whichever is less. If it is lesser, then you will credit sale. If it is more than the previous amount, you will credit the sale. If it is lesser, then you will debit the sale. If it is equal or at same price, then no entry. Yes, subsequent approval, you will again record the sale because it was reversed here. Yes, here you are reversing, correct? Therefore, you record it again. When there is subsequent rejection, you have already reversed. Therefore, no entry. Okay. Here, 4-column day book is prepared. Here, right? And what are the entries to be passed? We just discussed. No sales entry, customer account debit to sales, and ESAs are account debit to trading account. Same way for numerous transactions is given. 2 memorandum books maintained, sale or return day book, sale or return ledger. Memorandum books are not part of books of account. Goods sent, no entry in the books of account. Here, sales entry is recorded, no entry when it is returned, and ICSR account debit to trading account in case of books of account. Memorandum books, customer account debit to goods sent on approval and goods are sent. Here, reverse the entry, again reverse the entry, either exception or accepted or rejected. Any case, it will be reversal only, and in case of no intimation, no entry is passed. Yes, so this is my theory of goods sent on approval or return basis. Okay, now let us go through the problems. Yes, open page number 77. Open page number 77. Write down. Sir, I will give you the working note for this. There is no working note given here. We'll make the working note. Okay, write down now. First, okay, I'll go to the problem, then we'll write down the working note. A firm sends goods on sale or return basis. Yes, a firm sends the goods on sale or return basis. Customer have the choice of returning the goods within 1 month. Yes, underline this, within 1 month. So the time period given is 1 month. During May 2018, the following are the details of the goods sent. Date, this is the second. So 2nd May, 8th, 12th, 18th, 20th, and 27th. Customers are given. What is the value of the goods sent on approval is given. Within the stipulated time, P and Q returned the goods. Next, B, D, and E signified that they have accepted the goods. That means what? P and Q have returned. B, D, and E have accepted. R is what?
No intimation.
No intimation, that is balance lying with customer. Okay. Show in the books of the firm the sale or return account and customer Q account for sale or return account as on 15th June 2019. Okay. Write down working note. Working note. Goods sent on sale or goods sent on approval or return basis. Goods sent on approval or return basis. For that, draw 3 arrow marks. First arrow mark, write down goods returned. Goods returned. Write down one by one. P rupees 17,000. Q rupees 25,000. Q rupees 25,000. Now listen, look at the question. Right? So here what have they given? Show in the books of the firm the sale or return account and customer Q for sale or return account as on 15th June 2019. Okay. Right? So you are supposed to prepare what? Customer Q's account. Remember. So Q, remember now what is the amount you have returned?
25,000.
25,000. So this amount will come in Q's account also. Everybody clear?
Yes.
Yes. So now total this how much?
42.
Write down 42,000. Write down 42,000. Next, second arrow mark. Goods accepted or goods approved. Right? Write down BDE. B, D and E. B hyphen how much?
22,000.
22,000. D hyphen
5,500.
5,500. E
2,000.
2,000.
add all the three.
29,500.
29,500.
29,500. Last arrow mark. Balance with customer. Balance with customer within bracket. No intimation. No intimation. Yes, that is R. How much?
28,000.
8,000.
Now, if you come, it will be very easy for us to understand this question. Okay, now look at this. Now look at the screen. All of you, sale or return account, and then Q's account is prepared. Sale or return account, very simple. To sundries sales 29,500. Yes, everybody. To sundries sales 29,500. To sundries returned 42,000. Correct.
Yes, sir.
Yes.
By sundries, goods sent on sale or return basis 99,500. Now connect all three arrow marks and write down total. Total how much? Add 29,500 plus 42,000 plus 28,000 rupees 99,500. Correct. So in your sale or return account, your total goods sent on approval or return basis will come on the credit side, 99,500. I told you guys, similar to your memorandum books, remember, either acceptance or rejection, both should be reversed, correct? Because your closing balance should always be closing balance lying with customer. Artha aita ellarigu? Yes. So here to sundries return, to sundries sales, both will be debited because balance should be 28,000. To balance carried on 28,000. If you want 29,500, you give two arrow marks and write down P and Q. For 42,000, put three arrow marks and write down BDE. Sorry, ulta. 29,500 is BDE, 42,000 P and Q. 42,000 here, put two arrow marks, write down P and Q. For sales 29,500, put three arrow marks, write down BDE. Done? Yes. So ade Q do here, P and Q is there. That Q you put a connection here 25,000. That Q put a connection here 25,000. So here you are debiting, correct? Here you have to credit by sale or return account 25,000, and therefore to sale or return 25,000. In to sale here this 20, this one you connect here. This one you connect here. 99,500 only all are included is A. All of them, that is P, B, Q, D, E, R. Everybody is there. Q portion will come here. First. Simple. Everyone
to
understands.
sale or return ಇಲ್ಲಿ balancing figure ಆಗುತ್ತಲ್ಲ sir?
Where? In Q's account.
Yes sir.
Q's account is not balancing figure. It is this entry. See, double entry, no, it is. Q account you're debiting, you're crediting sale or return account by 25,000. Okay. And here Q's account you're crediting and debiting sale or return account by 25,000. So this 42,000 contains 25,000. This 99,500 also contains 25,000. Clear? Yes. Next one. Yes, tell me.
They asked to prepare R's account. What should
Same way, ma. R's account,
yes,
that will be balanced, no? It will be remain. First.
okay.
Okay, good. Goods are to be returned within 15 days from the dispatch, failing which it will be treated as sales. Okay. So your time period is 15 days. Underline 15 days. Next. The books of X are closed on 31st December 2019. Prepare the following accounts in the books of X. Sale or return, sold and returned day book, and total account. Remember this? Yes. Sale or return day book and total account. Okay, now. So here, they give you the transactions. X supplied goods on sale or return basis to customers, the particulars of which are as under. Date of dispatch is given, party's name is given, amount and remarks is given. Okay. So 10th December, right? What is the time period? 15 days. So therefore, has the time expired for this as on 31st December?
Yes, sir.
Yes, sir.
Yes.
Yes,
So
sir.
even though no information is received, but
Same.
time has expired, therefore, what will you consider this?
Sales.
Sale, right?
Sale
So this
entry.
is my sale. If you remember this, you can see this, it is sold. Okay. If you can see, that is sold. Next, 12th December, 15 days when you add, how much? It is
27.
again
27.
within 31st. There are but anyway, they've given it is returned on 16th December, right? So in the returned column, how much will you write?
15,000.
Got it? The returned column you write 15,000. Next. Here, goods worth rupees 2,000 were returned on 20th December. 15th December, you have sent 12,000. Okay. 15th December, you have sent 12,000. Goods worth rupees 2,000 were returned. Therefore, if you see here, 10,000 and 2,000 in two separate columns. 10,000 considered sold, 2,000 is returned. Next, on 20th December, 16,000 goods are returned on. I don't think it's there. Okay, goods retained on 24th December 2019. This is Mr. D and F, correct? So here DEF 16th December. Goods retained. Goods retained meaning what? Yes.
Sold.
Yes, it is goods retained by whom?
Accepted.
The customer.
Yes, that is the customer. So you mark this, right? Mark it in a different ink or something and write down goods retained means nothing but goods accepted. Goods retained is nothing but goods accepted. Okay, now. So it will be considered as sold. So that 16,000 and 11,000 will come here in sold column. Then your total sold and returned column 47,000 and 77,000. Okay. Balance will be what? This 13,000. So 47 plus 17, how much? Yes, quick. 60? 4,000, correct? 64,000. However, total of this column, make a total of this.
77.
Total of this is 77,000, correct? Therefore, balance 13,000. No information is received and it was sent on 30th December. What is this? This is goods lying with customer, correct? Therefore,
Yes, sir.
same thing has come here. Messrs. GHI 13,000 is here. Okay, in the amount column, but however, it is not there in the sold or return column. Now, it is very simple. Goods on sale or return total account. This is nothing but similar to your sale or return account. Yes, this is your sale or return account. Ide tara will be preparing now. Okay, by goods sent on sales or return basis 77,000. Yes. Yes,
sir.
all your returns total will come here, sales total will come here. Balance is 13,000, 17,000, 47,000. Everyone got? This is nothing but balance line with customer. 13,000 is balance line with customer. Clear, everyone?
Yes, sir.
Yes, sir.
Yes, sir.
Sir, how is the first entry different from the last entry?
1 second. Which entry, ma?
Sir, the 10th December and the 30th December.
Okay, I will tell you. See, 10th December, date of dispatch is 10th December, right? What is the credit? What is the time period given for acceptance? 15 days. Yes? So 10 plus 15 is how much? 25?
Yes, sir.
Yes. If no information is received as on 31st December, what will you consider? Isn't it sale? Because it is whichever is earlier, either approval or expiry of the time period. Has the time period expired as on 31st December?
Yes, sir.
Since time has expired, will it be sale?
Yes, sir.
Yes, so that is why you consider sale. However, here has the time expired as on 31st December?
Yes, sir.
For second transaction.
Yes, sir.
Last one, time has not expired because date of transaction is 30th December, correct?
So 15 days.
15 days will be in January. Yes, it will be in January. So as on 31st December, time has not expired. Therefore, it will be treated as goods lying with customer. Clear?
Okay, sir.
Okay, that's the difference. So with this, done. Even with sale on approval or return basis, goods sent on sale or approval or return. Last chapter is what? Inventory. Yes. Last chapter is inventory. Yes. Anyone now? What do I mean by inventory? Neat agi chart kodkondu explain madidini. Yes. Let me see if anybody can answer this. Anyone? Nobody?
Sir, inventory is the tangible asset held in the business process, which includes certain things and excluding certain.
Ad nangu gottu. Includes certain, excludes. What? That is important. No. Yes. Nobody.
Sir,
Okay, I'll only tell. Chill. Okay. Yes. Inventories are what? First thing you should tell me. Is it asset, liability? Is it tangible, intangible?
Tangible asset.
Inventory is can be defined as assets held. Yes, they are assets held. For this, I've given you 3 arrow marks. First one was for sale in the ordinary course of business. Yes, all the assets held for sale in the ordinary course of business is my inventory, which means what? Held for sale in the ordinary course of business is nothing but my finished goods.
Finished goods and stock.
Yes, sir. Finished.
So finished goods and stock in trade. So held for sale in the ordinary course of business or in the process of production for such sale, or process of production for such sale, which is my
Work in progress.
Work in progress.
or for consumption in the production of goods or services or both. Yes.
Raw materials.
Raw materials, including, it includes maintenance supplies and consumables. Yes, it includes maintenance supplies and consumables other than, yes, machinery space, standby equipment and servicing equipment. Remember this? Yes. So I repeat, assets can be defined as inventory can be defined as assets held for sale in the ordinary course of business, in the process of production for such sale, or for consumption in the production of goods or services for sale, including maintenance supplies and consumables other than machinery spares, servicing equipment and standby equipment. This is my inventory. Yes. So simple. It includes your finished goods, stock in trade, raw material, and my work in progress. It also includes my loose tools, yes, like screwdrivers, etc. Yes. However, it does not include my
Standby equipment.
servicing equipment, standby equipment, and machinery spares. Remember this? Yes. So this is my definition of inventory. Next, I told you, what did I tell you? Most important aspect. Why is inventory important? Correct. Inventory is one of the only figures that is
estimate.
Correct. I use some words here. Arrived at and not derived. Correct. It is the one of the only figures that is arrived and not derived. You do not pass a journal entry and all normally. Yes. What you do is you go take the physical stock and find out what is the stock as on the date of the closing, and you arrive at the closing stock. Correct. That is why it is important. Yes. Since you're arriving at the figures, there is possibility of manipulation by the management, either by inflating the inventory or deflating it. Correct. Which in order to increase or decrease their profitability. I had given you an example also. What is the effect it has when the closing stock is overvalued or undervalued? Whenever a closing stock is overvalued, your profit is
Increasing.
Overvalued. Whenever closing stock is undervalued, your profit is
Decreasing.
Undervalued, right? Because closing stock is like, I'm not saying it is like or in the form of my income. Correct. So you treat it like that, you think like that, but don't write it is income. It is not income, it is an asset. Right? It is an asset. Stock is always an asset, but from the perspective of P&L, because more the closing stock, more higher is the profit, lesser is the closing stock, lesser is the profit. Now opposite, opening stock is overvalued, my profit will decrease. Opening stock is undervalued, my profit will
Increase.
Yes. So that is the impact it has. Where and why it is important from an auditor's perspective, because it can be manipulated. Yes. Why can it be manipulated? Because it is a arrived figure. It is an arrived figure. Okay. Now, valuation of my inventory. Normally, it is valued at cost. Whichever is less. Cost or NRV, whichever is less. Yes. What? So when I say cost, what are the things it includes? COP, cost of purchase. Yes, it includes my cost of purchase. What will form part of cost of purchase? My purchase price. Purchase price. My taxes which are not recoverable. Yes, and my freight inwards. Yes, these are certain examples which are included in cost of purchase. Next, what is excluded?
Trade discounts,
Trade discount,
rebates, duty drawbacks, etc. Yes, and all the taxes which are recoverable obviously will not form part of cost. Will not form part of cost. Next comes my cost of conversion. Right, that is converting my raw material to my finished goods. Right. So what is the cost of conversion? My direct material direct
Direct
labor
labor,
and
indirect cost.
indirect cost or overhead cost. Yes. Normally, what are the three things that are not form part of my cost? SAP, remember?
Interest or borrowings.
Selling,
Administration and financing.
finance charges. However, for administration, you should remember whichever cost that is required to bring the asset to, that is the bring the inventory to its present location and condition, will be considered as form part and will form part of cost. Next, what are the other things to be excluded? Yes, storage cost. Remember, my storage cost is
Abnormal
excluded.
cost.
However, what is an
Abnormal cost.
exception for storage cost?
If it is necessary
It is
for
not
its storage.
necessary for
If it is necessary, like dairy products.
If it is necessary for what?
So for maintaining that stock.
for further product.
Yes.
production.
Yeah, if it is required or necessary for it to be, or for it to be processed and made available for the next stage of production, correct? Until that point only you will consider. After that, whatever you incur, that will not form part of my storage cost, right? Yes, so that is an exception, and obviously abnormal cost will not form part of my cost. Yes, this is the cost. What is NRV? Net realizable value. Right? For finished goods is different. For WIP, NRV is different. For raw material, it is different. For finished goods, what is my net realizable value?
Selling price minus
Selling price minus estimated selling expenses. Yes, selling price minus estimated selling expenses. WIP, what is my NRV?
Selling price minus
estimated
selling
selling
expenses
expense
minus estimated cost of conversion.
Yes, excellent. So it is same as my finished goods. First you should copy paste, that is selling price minus my estimated selling prices minus estimated cost of conversion. Minus my estimated cost of conversion. This is my NRV for WIP. What is the NRV of raw material?
Replacement
cost.
Next, special point to note here is raw material is not normally valued at cost and whichever is this. It is normally valued at cost. However, if both NRV of raw material as well as NRV of my finished goods is lesser than its respective cost, that is lesser than the cost of raw material and lesser than the cost of finished goods, then only you will value raw material at NRV. Yes, then only you will value raw material at NRV. This is my valuation of inventory, correct? Okay, next, what did we remember? No, what did we discuss? We also discuss that cost or NRV is not done on a total basis. It is done on an individual item basis. However, if it is not practicable, yes, however, if it is not practicable, then only you will do it on total basis, right? That is a point to remember. Next, what are the methods of inventory valuation, right? Here you have two main categories. One is cost method and non-cost method. Cost method and non-cost method. Under cost method, yes, anybody? Goods that are interchangeable and goods that cannot be interchangeable. Yes. Wherever goods cannot be interchanged or it is non-interchangeable, then what is the method we use?
Specific identification.
Identification. Whenever goods are interchangeable, yes. First one,
P4.
Simple average,
Weighted average price.
Under non-cost method, you have two, that is standard cost method and your
adjusted
selling price method.
Adjusted selling price method is normally used by whom? Normally used by retail. By retail, wherever it is not practicable for them to trace the cost of individual inventory items. Yes, whenever it is not practicable to trace the cost of individual inventory items, that is when you use adjusted selling price method, wherein your closing stock also you first find out at selling price and then you remove the gross profit from that selling price of the sales value of the closing stock and you arrive at what is the cost of closing stock. Yes, that is my adjusted selling price method. Standard cost method normally used in cases where there is frequent purchases as well as the price keeps fluctuating frequently. But remember now, listen, whenever the prices fluctuate frequently and whenever there are numerous or frequent purchases, I use standard cost method. Okay, now why standard cost method is used? Because price keeps fluctuating frequently, it becomes very difficult, right? Standard cost is derived at using my past, right? What is the standard cost of this product or material? Okay, and then you record based on that. Example is crude oil or your petrol. Yes, fluctuates every day. Every day it keeps fluctuating and purchases on a frequent basis. So again, standard cost can be used in such cases. Clear, everyone?
Yes, sir.
These are my methods of valuation. First in, first out means what? Whatever is purchased first, that is what is assumed to be sold first. Yes, all these are accounting assumptions. It doesn't mean that practically or in real life that is how it moves. Goods can move in any order. Remember my tomato example, that if you had gone to the store and asked him, sir, first in what has come, I'll give you now 1 month back tomato. If you give Ade tomato, he'll hit you. Remember this? Yes. So first in, first out is not a practical, it doesn't happen practically out there. It is just an accounting assumption. Whatever has come in first will go out first. Yes. Same way, last in, first out means whatever is purchased recently is what is issued first. Simple average is very simple. Whatever is the total of my rates that I purchase, I divide it by the number of purchases, and weighted average, I give weightage to the quantities purchased also. Yes, that is my weighted average price. Clear, everyone? Yes, in FIFO, in first in, first out, the value of the inventory will be, yes, the value of the inventory will reflect the latest purchase or the first purchase?
Latest
Purchase. So whatever is purchased first is issued first. Yes, therefore the closing stock under FIFO will represent the latest purchase value. Clear? However, under LIFO, since whatever is purchased last is issued first, your closing stock will reflect the initial or first purchase. Therefore, now connecting again, in an inflationary economy, under FIFO, the closing stock value will be higher because it represents the latest purchase. Under LIFO, in an inflationary economy, the purchase closing stock value will be lesser. Clear this? Is this clear? Yes?
Yes, sir.
All right. So these are my methods of valuation of inventory. Yes. Next. Then we learned that there are different types of problems which might come, right? So physical verification may be done either before the reporting date or after the reporting date or on the reporting date. Yes. Whenever the physical stock verification is done on the reporting date, yes, do I need any adjustments?
No, sir.
No, sir.
No adjustments. However, certain adjustments are required. Tell me what? Anybody? At that time, I would have told you, yes, take the stock as it is, but certain
Consignment goods.
yes. So you will have to think all those things you have to give adjustment. Remember, I told you that the person who's taking the stock doesn't know whether it is belonging to the business entity or not. Yes, Kartikeya. What they do? Simply blindly, whatever the stock, they take it. Correct. So if it includes goods which are not owned by the person who's maintaining the books, then you need to exclude it. Correct. Also, goods lying with prospective customers have to be added. Correct. So all these adjustments you need to give. All those adjustments. But as such, if I have to tell you, if it's on the same date, then yes, you can take the same stock, provided you give an adjustment to these other stock. Clear? Now, if it is done, the physical verification is done before. If the physical verification is done before the reporting date, then what will we do? We will add all the purchases
and subtract
minus all the cost of sales. Yes, minus the cost of sales. Again, purchases means you will consider net purchases. Sales means you will consider net sales. After reducing the respective purchase return and sales return. Clear, everybody?
Yes, sir.
Now, ulta. If the physical verification is done after the reporting date, then you will subtract all
Purchases.
purchases and you add the
Sales.
again net purchases and net sales. Again, net purchases and net sales. Remember this? Yes, everyone? All right. Then certain special points we remember. Yes, we discussed sale on approval or return. Whenever it is sale on approval or return basis, at that time, I've given you certain charts. Correct. Now, if the goods are sent on sale or approval or return basis before the physical verification happened, that means what? Goods are not forming part of my inventory. Yes. Goods are not forming part of my inventory. When goods are not forming part of inventory, subsequently, before the reporting date, if the goods are approved, will you have to give any adjustment?
Yes, sir.
No, sir.
No adjustment, because earlier goods is already sent before verification. It is not forming part of my inventory. Remember this point, yes? As on date, is it forming part of my inventory? When the verification happened, it is not forming part of inventory. Sale andre anyway you have to reduce. Earlier itself, when it is not forming part of inventory, obviously subsequently when approval happens, you will not consider it. Clear? Yes. Now, if there is any sales return between that period, will I take the inward? Yes or no?
Yes, sir.
Yes, sir.
Yes, because earlier it was not forming part of inventory. Therefore, if any sales in return happens, I will take it as inward. Clear, everyone? Yes. Now, the sales return happens before the physical verification. Then will I add it?
No.
No, because as of the date of physical verification, already it is included. Yes, already it is included. Next, obviously, the other points we have already discussed, consignment, right? If consignee is stock, my consignee stock, will it form part of my inventory?
Yes, sir.
Yes, sir.
If I am the consignee, will it form part of inventory?
No.
No, sir. We have to subtract.
Inventory. Yes, clear, everyone? These are some of the special adjustments that we had discussed. Okay, now?
Sir, abnormal sales, sir. Can you repeat them?
Yes, if there is any abnormal sales. Yes, sure. So now what another type of problem is, right? They'll give you abnormal sales and normal sales. At that time, what we have to do, we have to bifurcate the sales, and as normal sales and abnormal sales, all the respective abnormal sales and abnormal stock and abnormal purchases will be taken in the abnormal column, and all the normal sales will be taken in the normal column. Right, so you need to bifurcate the sales and the gross profit mainly based on normal and abnormal. Clear? Yes. So accordingly, we will prepare a trading account in 2 different columns and then find out what is the closing stock. Remember this? Yes. And then obviously you have your adjusted selling price method, wherein again, what will I do is I will take the closing stock also at selling price, find out what is the gross profit, then find out what is the gross profit percentage. Yes. Yes, how do I find the gross profit percentage? Gross profit divided by sales plus closing stock at selling price. That will be my gross profit percentage. That I will multiply with my closing stock at selling price, remove it from my closing stock at selling price, and find out what is the cost of goods sold. This is my adjusted selling price method. Okay, I think there is a network issue. Yes. Is there a network issue?
No, sir.
No, sir.
No, sir.
No, sir.
All right. Yes, clear, everyone? This is my summary of my inventory chapter. Now let us go through the theory. Take out your caps material. Yes, what is the page number?
27.
Page 27. Okay. Yes. So inventory means, again, they're not given the definition here, but you guys write down the definition. Can you guys write down? Write down. Inventory. Write down in your notebook, write down. Inventory can be defined as assets held. Can be defined as assets held. Put a colon and then continue. Under that, point by point, write down. First point, for sale in the ordinary course of business. For sale in the ordinary course of business, inventory can be defined as assets held for sale in the ordinary course of business, comma, or second point, in the process of production for such sale. In the process of production for such sale. Right? First point only within bracket write down finished goods / stock in trade. Finished goods / stock in trade. For second point write down within bracket WIP, that is work in progress. Or for consumption, this is the third point, for consumption in the production of goods. In the production of goods or services for sale. In the production of goods or services for sales. Yes, within bracket write down raw material. Within bracket write down raw material. Yes, this is not a part of the definition. Whatever you've written in the bracket is for your understanding. Yes, next point, fourth point, including maintenance supplies, and consumables. Including maintenance supplies and consumables. Fourth point, other than machinery spares, comma, servicing equipment, and standby equipment. Okay. Yes. Yes. So inventory means items or consumables used in or relation to production and finished goods. Inventory meant for being traded. This is nothing but stock in trade. First one is items, means items or consumables. Consumables is nothing but my raw materials. Okay, used in relation to production and finished goods. Okay, this is my inventory. Next, inventory consists of raw materials, work in progress, finished goods, loose tools also. Loose tools. Write down. Okay, it's given down. Other inventory includes loose tools. Okay, what are the examples for loose tools? Hammers, screwdrivers, etc. Stores and consumables. Inventory is physically verified and valued at the end of financial year. AS2 deals only with valuation. Underline the word valuation. So AS2 only deals with valuation at the end of the financial period and then valued, not with verification, right? It does not deal with verification. Physical verification is a continuous or periodic process, right? Depending on the policy you follow. Either you can do it on a continuous basis or periodically, say once in 3 months, once in 6 months, etc. As on 31st March, you include the same. Okay. On any other date, see, this is physical verification, you'll need 2 arrow marks. You draw 2 arrow marks for this. This is subpoints for this. Okay. As on 31st March, you just include the same as it is. However, on any other date, say 25th March or 10th April, include adjustments to impact the intermediate dates. Include the adjustments. Okay. What are the adjustments is given here, right? In case of 25th March, right? In case of 25th March, you will add the purchases, right? You will add stock with consignee, correct? My stock lying with consignee, my stock lying with prospective customers will be added. Yes, everyone. Less cost of sales, less other stock lying with us, say consignee, right? Where I am the consignee, that I'll be less. That I'll subtract. Always so write down here in flower packet opposite, consider opposite for 10th April, right? Consider opposite for 10th April. Alle you write down minus symbol happy purchases, Kartikeya, minus purchases. Here put a flower bracket and write down opposite for 10th April. You don't have the book, Kartikeya?
Sir, print ಮಾಡಿಸಿಲ್ಲ sir, ಅದಕ್ಕೆ ಅಲ್ಲೇ edit ಮಾಡ್ತಾ ಇದ್ದೆ.
Acha, you're doing in the PDF?
Yes, sir.
Okay. Less so here you write down other, what did I say? Opposite for 10th April. Here you write down less purchases, right? Less purchase, just write down minus purchases, minus stock with consignee bar prospective customers. Stock with consignee bar prospective customers. Then you add, put a plus symbol and write down same thing, cost of sales, other stock. Cost of sales and other stock.
Sir, for this valuation after the closing date, we can do the working back and write the answer at the end.
In the sense, I didn't understand. So you said first you'll do this.
No, sir. They'll give the stock on 10th April, no, sir.
Correct.
So I'll write at the bottom, and I'll do the same adjustment like plus purchase and minus sales.
Oh, present. But presentation, I would suggest you to go from 10th April to this month. Presentation wise. Perfect Bekala marks. I don't want. See, no doubt you can do that way. That is also right to Biksha. Okay. But why make the life of the evaluator difficult? He has one answer. No, you give him like that only. No, it becomes easy for him to evaluate. Now you should think from examination perspective. Okay. If you are finding it difficult, if you are, want that format to be same, you do in rough if you want. Tuck rough, then you copy paste. But my final answer, let it be from 10th April to down on. Okay. My suggestion that is. Okay, next. Now, always consider obviously net purchases, correct? Cost of net sales you will consider. All net you will consider. If physical stock is taken on 10th March, almost reversal of Supra. A 10th March Allah. Idu make it if physical stock is taken on 10th April. Yes, 10th April, then almost reversal of Supra to arrive at stock of 31st March 21. Cost formula suggested as per AS2 is FIFO weighted average, correct? FIFO is also suggested, weighted average is also suggested, specific identification method is also suggested. Whenever it's not interchangeable, then they suggest specific identification method. Okay, everybody? Yes. Next, else, LIFO, all this is obviously for our understanding. All this is our understanding. Again, they've given what is the examples for FIFO, right? On 4th Jan 2020, 100 units purchased at rupees 20. Okay. Next, 20th March, 300 units purchased at 22 per unit. So total inventory is given. Okay, 4,400 units at 8,600. Govinda sold on 25th January, that is in between these two dates. Okay, now on 25th January, 250 units. So obviously you will sell at what? At 20 rupees, correct?
Yes.
You are following. I've told you guys, irrespective of the method followed, correct? If it is between, so 25th January, first transaction, whatever it is, will be same, right? So whether LIFO or FIFO will be same. So 250 units at rupees 20, correct? So balance is out of 22. Therefore, closing stock is how much? 400 minus 250. Yes, everybody is understanding. Closing stock is 400 minus 250. That is 150 units valued at 22. Correct. That is the latest purchase. FIFO will always reflect latest purchase. So therefore, my stock value will be 3,300. Clear, everybody? Next, if it is LIFO, 250 units out of latest purchase or 22 per unit. Therefore, I know this should be our first purchase. This is wrong. 250 units. 250 units issued on the put an arrow mark and write down issued. You should not get confused with the closing stock. 250 units issued out of latest purchase of 22 per unit. Therefore, closing stock will be 100 plus 50. Artha aita idu?
Yes.
Yes. So 100 into 20 and 50 into 22. Therefore, 3,100. Simple average price, very simple. 20 plus 22 divided by 2, 21 into 150, 3,150. Weighted average, 8,600. Consider the whole thing. 8,600 divided by 400. Yes. So 8,600 divided by 400, 21.5 into 150, 3,225. Okay, now. Yes. So now, highest obviously is FIFO. I told you under inflationary economy, FIFO will have highest price because it reflects the latest purchase. Yes. Cost, and since it is our latest purchase, cost or NRV has to be considered on individual items and not total basis. Yes, mark that. It should be on individual items and not total basis. No ledger account for inventory. Yes, therefore you write down it is arrived and not derived. Write down arrived and not derived. Idike. Inventory valuation, I told you, raw material normally at cost. However, if NRV of both raw material and finished goods is lesser, then you will consider at NRV. NRV for this is the replacement cost. Okay. Next, finished goods at weighted average price is cost or NRV, whichever is less. Here, cost is nothing but cost of purchase plus cost of conversion plus other incidental cost of manufacturing. Ignore SAF. Remember, ignore SAF. NRV for finished goods is selling price minus selling expenses. For WIP, it is selling expenses minus cost of completion. Selling price minus estimated selling expenses minus cost of completion. Clear, everyone? Here, I've told you it is on individual basis. Okay, now. Next, physical verification as on balance sheet date, that is year end date. If not, carry out adjustment for purchase or sale. Yes. Profit on sale and profit on cost. Very important. Mark this important. Most of you will be doing mistake here. Profit on sale and profit on cost. Please observe whether it is profit on cost or profit on sale. 25% on cost is nothing but 1/5 on sale. That is 1/4 on cost is nothing but 1/5 on sale. Clear? This is normally required for consignment and sale on approval wherever it is given. Okay, now. So inventory losses, normal loss to be borne by good units, abnormal loss to be removed from normal trading account. Yes, that's the reason why we prepare two separate columns. Yes, that is my theory of inventory. Let us now go to the problems. I think 10 minutes will be concluding the class. Don't worry. Yes, go to the problem section. This is all full fresh in your minds, no? Answers starting class it was like I was teaching a fresh batch. Open. Yes, page number
61.
61. Yes, open page 61. Yes. Yeah, everyone found it?
Yes.
So from the following particulars, ascertain the value of inventory as on 31st March 2020. Okay, now. So inventory as on 1st April 2019 is given. That is opening stock, correct? Purchases made during the year, sales, manufacturing expenses, selling and distribution, administrative expenses. At the time of valuing inventory as on 31st March 2019, a sum of 20,000 was written off on a particular item which was originally purchased for 55,000 and was sold during the year for 50,000. Yes, now everybody. So therefore, this abnormal item which is included in the opening stock is sold. Therefore, is it a part of my closing stock?
No.
Not. So very simple. Whatever is included in the opening stock, remove it. Correct. What is included in the opening stock? It was originally purchased for how much?
55,000.
It is purchased for 55. And what is the value of the inventory that is written off as on the 31st March?
20,000.
55 minus 20, 35,000 is included. Clear? This 35,000, let us take it out or remove it from my opening stock. 3,50,000 minus 35,000, 3,15,000 only we will consider. Clear, everybody?
Yes,
3,15,000 will consider. Next, from my sale, abnormal sale has to be reduced. What is my sale?
50,000.
18 lakh 50 is the total sale. Out of this 50,000 is from this abnormal item. 50,000 I remove, so 18 lakh I will consider. Now very simple. Yes. Now can I easily find out?
Yes.
Yes, now I can easily find out. What I should do is, I should now draw the trading account or in a statement format only for normal items. Can I do? Yes. Yes, take out your notebook, write down. Okay, in the question, gross profit, is it mentioned? I don't think.
No, sir.
No, write down. Write down. Gross profit. Gross profit. I'll question will continue ಮಾಡಿ. Except the ಅದನ್ನ scratch ಮಾಡ್ಬಿಟ್ಟು write down. Gross profit on sales other than the abnormal sale is equals to 20%. Is equals to 20%. Clear? Yes. Now write down working note number 1. Working note number 1. Computation of cost of sales of cost of normal sales. Yes. Or cost of sales of normal items. Okay. Yes. Now write down particulars and rupees. Particulars and rupees. Illi write down total sales. Total sales. The amount column write down rupees 18 lakh
18 lakh.
18 lakh 50,000 total sales. Right down to 18 lakh 50,000 less sale value of abnormal item, less sale value of abnormal item, rupees 50,000, rupees 50,000. Yes, below that write down. Therefore, total sales of normal items rupees 18 lakh, correct? Rupees 18 lakh less gross profit at 20%, less gross profit at 20%. How much? 3,60,000. Yes, 18 into 20% is 3,60,000. Therefore, cost of sales.
14 lakh
Cost of
40,000.
sales is 14 lakh
40,000.
14 lakh 40,000. Right now, cost of sales is 14 lakh 40,000. Done, everyone? Cost of sales is 14 lakh 40,000. Now let us do normal one. Write down. Statement of inventory in trade as on 31st March 2020. Statement of inventory in trade as on 31st March 2020. Write down. Opening stock of normal items. Opening stock of normal items. I'll lay down, write down within bracket. Do the computation now. 3 lakh. How much is the 3 lakh 50 minus 3 lakh 50 minus open bracket 50,000 minus 20,000. Correct?
Yes.
3 lakh 50 minus open bracket 50,000 minus 20,000 close bracket. Close.
Sir,
55,000 minus 20,000.
55,000. Illa. 55,000 minus 20,000. Right, sorry. 55,000 minus 20,000. That is again
3 lakh.
Yes.
3 lakh
3 lakh 50 minus 35. 3 lakh 50 minus 35,000. That is
3 lakh 50.
now the amount column. Final outside amount column. Write down rupees 3 lakh 15,000. 3 lakh 15,000. Next, below that write down add purchases. Add purchases. Yes.
12 lakhs.
12 lakh. Add purchases 12 lakh. Add manufacturing expenses. Add manufacturing expenses.
1 lakh.
Yes. 1 lakh. Less cost of sales. Within bracket write down working note number 1. Working note number 1. That is 14 lakh 40,000. Therefore, answer inventory as at 31st March 2020. Inventory as at 31st March 2020. Yes, how much?
1,75,000.
1,75,000 rupees. 1,75,000. Everyone understood?
Yes, sir.
Sir, we can do this in the form of trading account also.
Yes, you can. No problem. Okay. All right. So November 2020, physical verification of stock in a business was done on 23rd February 2020. The value of the stock was 28 lakh. The following transactions took place between 23rd February and 29th February. Out of the goods sent on consignment, goods at cost worth rupees 2,30,000 were unsold. What will happen to this? Tell me.
Should add, sir. It's our
Add back because it is not my stock, correct? It is not my stock. Yes. So you'll add this. Next, purchase of 3 lakh were made, out of which goods worth rupees 1,20,000 was delivered on 5th March. What will you do with the 3 lakh? Whether you consider 3 lakh or 1,20,000?
3 lakhs, sir.
3 lakh.
Entire 3 lakh, because even goods in transit is nothing but my purchase itself. So entire purchases have to be added. Next, sales of 13,60,000, which includes worth rupees 3,20,000 sent on approval. Remember this exact problem we have solved. Yes. So you will have total sales. For that, you draw 2 arrow marks. One is sale on approval, other sales. Sale on approval 3,20,000. Yes, everybody remembers. 3,20,000. Half of these goods were returned before 29th February, but no information is available regarding the remaining goods. That means entire 3,20,000 will it be included in my stock? Yes or no?
Yes, sir.
Yes, sir.
It will be included in stock. Correct. Now, this stock taken on 23rd February, right? Does it include this stock 3,20,000?
Yes, sir.
Yes, because say it was sent afterwards. Correct. It was
Yes,
sent.
sir.
It should be included. Therefore, first we need to find out what is the cost of this 3,20,000, right? Multiply into cost. Now, what is the cost? It is 25% on cost. Therefore, 1/5 on sales.
125.
So therefore, you will do into 100 by 125, and you'll find out what is the cost. Yes, into 100 by 125.
2,56,000.
2,56,000. Correct. This 2,56,000 is included in 28 lakh. Therefore, I told you if you add back this, then you have to minus the cost of sales also. Clear? Yes. So if you see here, 2,56,000. So either they would have done that, or they would have taken. 1 second. Where have they done that? 1 second. 13,60,000 abnormal. Okay, I'll come back to that. Okay, so simple here. 2,56,000 you will add, and you will minus the total cost of sales. What is the cost of sales? We'll find out. Other sales. Okay, write down the working note better. Write down working note number 1. Working note number 1. Total sales 13,60,000. 13,60,000. Draw 2 arrow marks. Draw 2 arrow marks. Write down left hand side. Goods sent on approval. Goods sent on approval. Done. Yes. Below that, write down 3,20,000. Correct. 3,20,000. For this, again draw 2 arrow marks. 2 arrow marks. Goods returned before 29th February. Goods returned before 29th February should be included in stock. Correct. Should be included in stock. Next, right hand side, no intimation. No intimation. Again, write down should be included in stock. Should be included in stock. Correct. Now connect left with right. Connect left with right. And then write down 3,20,000 into 100 by 125. 3,20,000 into 100 by 125 is equals to rupees 2,56,000. Correct? Rupees 2,56,000. Next, right hand side, other sales. Other sales. Yes, how much is that? 13,60,000 minus 3,20,000.
10,40,000.
10,40,000. 10,40,000. For this, again draw 2 arrow marks. Draw 2 arrow marks. Now look at the question. What does it say here? See. Right. Half of these goods. Next, goods are sold at cost plus 25%. However, goods costing, very important. It is goods costing 2,40,000. Correct. Has been sold for 1,50,000. Correct. Therefore, for this 10,40,000 in your note, draw 2 arrow marks. Left hand side, write down abnormal sales. Abnormal sales, how much?
1,50,000.
1,50,000. Very good. 1,50,000. Therefore, right hand side, normal sales is
8,90,000.
8,90,000. 8,90,000. For abnormal sales, put a downward arrow mark and write down cost of sales is equals to 2,40,000. Correct? Cost of sales 2,40,000. And right hand side for normal sales compute. Yes, normal sales 8,90,000 into 100 by 125.
7,12,000.
7,12,000. Now connect these two. That is 2,40,000 and 7,12,000. How much?
9,52,000.
9,52,000. Now connect left with right again. That is 2,56,000 and 9,52,000. Yes, how much?
12,08,000.
12,08,000. Okay, 12,08,000. Done. Yes, so 2,56,000 you will add and you will subtract 12,08,000. Then you will get the answer. Okay, now Yes. So now check the answer now. Here 28 lakh you have. Then 2 lakh 30 is not my goods, correct? It is received on consignment. Therefore, I add back both purchase, that is normal purchase, and goods in transit also will be added back. Yes. What they have done here is cost of goods sent on approval basis. That is only of the balance lying with customer matra or add back money. So corresponding what you will see here also other that 1,60,000 portion, the cost portion, they have not added back. Are you understanding? Yes. Subiksha.
Sir, I understood the working also, but not.
Okay, here what they have done, no, half they have taken. We have taken entire 3,20,000. They have taken only 1,60,000. Whatever you add back, that only you have to minus. So here also you see here minus 1,60,000 they have done here. Got it?
Yes, sir.
Okay, that is why unnecessarily you can write here 2,56,000 and 12,08,000. You still get the same answer. Got it, everyone? You follow my approach. You follow what is being discussed in the class. 2,56,000 you add back, and you, and then you subtract 12,08,000. You still get 23,78,000. Clear, everybody?
Yes.
Okay. Next problems are very simple. I'll just quickly glance to them. We don't have to solve it. Simple agide nodi. See, X, Y, and Z are in retail business. Retail business means what?
Adjusted
selling price method. Correct. So again, how will you calculate the cost of purchase? I told you, I've given you a format. Whatever is the goods, so 5 lakhs, 15 lakhs, 75,000 minus what will you do first? Yes, tell me. You subtract trade discount first, correct? First you subtract trade discount. After that, on the net purchase figure, you will find out what is the
sales tax.
Correct. That is sales tax of 11%. Then you will add your packaging and transportation charges. Yes. Yellow working irutte. One nimsha. Yeah. See here, 15,75,000 less trade discount at 3%. Then on that you will add the sales tax of the GST, and then to that you will add the packaging and transportation charges. The total purchase value is 17,83,000. 17,83,084. 841. Make this 841 here. Here make it 841. Okay. Yes. Next. Okay. So then sales during the year, correct? 22,45,500 less closing inventory at the selling price. In the trading account same thing they're doing. Okay. Not sales, sorry, they add. You have to add the closing stock at selling price, correct? Everyone, yes or no? Yes. So at selling price, you add 24,80,500. You will minus the total purchases. Whatever is the gross profit, you will divide it by, this thing will be divided by 24,80,500. Okay, now. Then you get 28.09%. So from 2,35,000, that is from this, you will remove this. Right? So 2,35,000 minus 28.09, you will get closing stock of 1,68,988. Then Paita, yes, this is the adjusted selling price method. Okay. Next one is again. So next one, stock taking of XYZ stores for the year ended 31st March 2019 was completed by 10th April. So this is my backward. I have to come backward now. The valuation of which showed a stock figure of 1,67,500 at cost as on the completion date. After the end of the accounting year, till the date of completion of stock taking, sales for the next year was made of 6,875, profit margin of 33.33% on cost. 1/3 on cost is what percentage on sales?
1/4.
On sales. So you have to find out what is the cost of this. Remember. Okay. Next. Purchase for the next year included the stock amounted to 9,000 at cost, less trade discount of 10%. During this period, goods were added to stock of the markup price of 300 in respect of sales return. Okay. Sales return. After stock taking, it was found that there were certain very old slow moving items cost. Remember what did I told? Slow moving items, what do we do? Yes. Yes. Correct. Even note on this. Okay. Which should be taken at rupees 125 to ensure disposal to an interested customer. Due to heavy floods, certain goods costing 1,150 were received from the supplier beyond the delivery date of customer. As a result, the customer refused to take the delivery and net realizable value of goods was estimated to be 1,250 as on 31st March 2019. You are required to calculate value of stock for inclusion in the final accounts for the year ended 31st March 2019. closing stock is valued by XYZ stores on generally accepted accounting principles. Let us see the treatment one by one. Value of stock 1,67,500. Clear?
Yes, sir.
Next, add cost of sales after 31st March till stock taking. Sales, normally in the format method, when I'm going forward, I reduce. Here I will add, correct? So I'm adding my cost of sales 6875. From this, I'm taking my profit margin at 1/4. Okay. So 5156. Everyone got this? Yes or no? Next, my net purchases. My net purchases, the purchases of the next period, 8,100. How do I get 8,100? Now check. What is the purchase for the next year? Included stock amounted to 9,000. Everyone got this? At cost, less trade discount of 10%. So 900 into 90% is how much? 8,100. Everyone got this?
Yes.
Next, cost of sales return. Sales return is nothing but inward. Yes. It is nothing
Yes,
but my purchase. If purchase is reduced, obviously sales return also has to be reduced. Yes.
Yes.
So what is the net cost of sales return now? Tell me. See, during this period, goods were added to stock of the markup price of 300 in respect of sales return. 300 is what? At
Cost. Jeez.
300 is
Sales.
sale. Correct. Therefore, how do I find out the cost? 300 into
1/4.
Yes. So that is my, I take out the profit portion and remove, minus it and get 225. Everyone understood this? Yes. Find out what is the cost. That is the sales return. Next, loss on revaluation of slow moving inventories. Now see, let us see this. After stock take, it was found that there were certain very old slow moving items costing 1125, which should be taken at 525 to ensure disposal to an interested party. That means 1125 minus 525, how much?
700.
Yes. 1125 minus
600.
600.
Yes. So that 600 is the less here. Clear, everybody? Yes. That I'm reducing. Okay. Reduction in the value of account of default. Okay. Sorry. Loss on revaluation of slow moving inventories. Next, less reduction in value of account of default. Tell me. Here, check here. Right? As a result, the customer refused to take delivery and net realizable value of the goods were estimated to be 1250. Which one is this? See, due to heavy floods, certain goods costing 1150 were received from the supplier beyond the date of delivery. As a result, the customer refused to take the delivery and net realizable value of the goods was estimated to be 1250. Artha aita idu? What is 1150 minus 1250?
300.
300. That has to be reduced. Yes. Cost or NRV, whichever is less. Yes or no? Cost or net realizable value, whichever is less, that is reduced here. That 300, that is the difference that is take valuation of stock. Okay.
Sir,
Since it is
goods ಇನ್ನೊಂದ್ಸತಿ ಹೇಳ್ತೀರಾ sir?
Yadu?
Slow moving goods.
Yeah, sure. One second, let me. Okay, all the other adjustments everybody understood? Anyone has any doubts other than slow moving goods? Cost or NRV, whichever is less, you have to consider, right? So here NRV is lesser than the cost, correct?
Yes, sir.
So differential you are minusing here. Aste. Artha aita ellarigu? No. Yes. So difference, see, cost is how much? 1550, which is more than my NRV. NRV 1250. Cost is included in 167,500 is how much? 1550. Therefore, 1250 minus 1150. So 300 I'm minusing. So that I'm taking it at NRV. You have artha aita?
Yes, sir.
Okay. Yes. So next one is my slow moving inventory. Loss on revaluation of slow moving inventory. Correct. Now, what is the slow moving inventory? Where is it?
1125.
1125. Yes. After stock taking, it was found that there were certain very old slow moving items costing 1125. Correct, which should be taken at 525 to ensure disposal to an interested customer. So it is actually costing 1125, but I should value it at 525. Yes. to ensure disposal to customer. That means what? The realizable value now is 525. Yes, it is a slow moving inventory. I want to dispose it off. Everybody is understanding. It is a slow moving inventory which I want to dispose it off, and it should be valued at 525. So here it's nothing but my realizable value, correct? I can sell it at 525 only to the customer. Yes, so my cost is more than the NRV. Yes, therefore I value it at my NRV. So the differential I will reduce it from the value. Artha aita ivaga?
Yes, sir. Thank you, sir.
Everybody understood this? Anyone has any doubts?
Yes, sir. No.
Yes, that's it. Okay, with that we complete inventory also. Okay, so all the chapters that I have covered, I've completed. I think I took a little bit more than 3 hours, but I've completed it exhaustively. Almost all theory points I've covered, and glanced through all the different kinds of problems. Entire whatever is there in your problem material, I've revised everything for you. So, but ಆಗಲ್ಲ ಇವಾಗ ಎಲ್ಲ ಅರ್ಥ ಆಯ್ತು ಅಂತ ಅನ್ಸುತ್ತೆ, but you have to sit and do this entire problems. You have to solve it again. This booklet what you have got, you need to know everything in it. Okay, yes, so you do follow, attend all the revision sessions. I think already it's announced, right, on which date when it is. Attend all the revision sessions. I'm sure if you attend this and follow everything that is said, you can definitely score 100 on 100 in accounts. Okay, yes, all right. Thank you everyone. All the best to all of you guys. Go and give your best and rock the exams.
Thank you, sir.
Yes, sir. Sir.
Thank you, sir.
Thank you, sir. Bye, sir. Bye, sir.
Bye, sir.
Bye, sir.
Excuse me, sir. Sir, ಅದು sir. P&L adjustment.
Sameer, yes. P&L adjustment, no? I'll do one thing. ನಂಗೆ ಇವಾಗ ನೆನಪಾಯ್ತು ಕಣ, ಅವತ್ತು you never
ಸರ್ ಮೆಸೇಜ್ ಕಳ್ಸಿದೀನಿ ಸರ್ ನಿಮ್ಗೆ.
ನೀನ್ ಕಳ್ಸಿದ್ಯಾ ನನ್ಗೆ ಆಮೇಲೆ